I'm Andy Serwer, Editor-in-Chief of Yahoo Finance. It's been an unprecedented 19 months as the world faces a global pandemic. The Olympics delayed a year with no live audience, global summits canceled, flight routes suspended. The pandemic has forced countries around the world to turn inward, but we'd also found out just how closely nations and their economies are intertwined, and that goes especially for the US and Asia. Eye-popping price hikes on everything from steaks to used cars, shipping delays for bed frames and gadgets, rows of container ships anchored off major ports. They all draw attention to the US and the long journey many of our products take from Asia. Meanwhile, China's pivot towards common prosperity has coincided with an economic slowdown that makes US investors wonder if the country is stuck in a new age of volatility or just some growing pains amid its incredible rise. That's all set against perhaps the greatest challenge of our time, climate change, which will demand global cooperation, the likes of which we've never seen. The path forward will have its bumps, but that doesn't mean it won't end up benefiting people and companies on both sides of the Pacific. US-China tariffs will remain in place for now, but a softening of tone might make way for agreements on shared concerns. China's neighbors who feel stuck between feuding giants might find more breathing room. A receding pandemic may give way to the ceaseless trade and cultural exchange of old. At Yahoo Finance's inaugural All Markets Summit Asia, we'll talk to power brokers like Citi CEO Jane Fraser and Fubon Holdings Chairman Daniel Tsai, among many others, who will help us understand what's in store for the continent and what that means for the businesses here and around the world that depends on it. Welcome to AMS Asia, and welcome to our guest, Daniel Tsai, Chairman of Fubon Holdings. Daniel, nice to see you.
Nice to see you, Andy.
Pleasure to talk to you and talk to you about your company. And why don't we start off there, Daniel? The company is involved in insurance, banking, telecom, media. Can you give us an update of all the businesses you're in and which are most important to your bottom line?
Okay, of course, the financial services side obviously has the largest assets and also the largest profit. And other business like mobile, and we have also one of the largest cable system here in Taiwan, and we also own the largest e-commerce online shopping site here in Taiwan called Momo. Everyone, I guess, in this business trying to emulate what Amazon has been doing. But compared to Amazon, we are still a baby in terms of size. And, many businesses have been affected by the COVID, but we are very fortunate that, most of our business have not only not being impacted adversely by the pandemic, but it has even helped us a little bit, like our mobility business, our internet broadband business, even our online shopping business have been greatly benefited from the pandemic. The shutdown of other businesses, the lockdown, the travel restrictions. And the financial markets of the world have still been spinning, and we have just seen all this the newest quarterly reports from all the major Wall Street banks, and you must know they are all making a record profits, and I think because of the pandemic, and because of the easing, of the money supply, the financial assets value have been greatly inflated and helping all of the financial sector businesses all in all.
So we've talked about COVID-19 and the pandemic, and you talked about how that affected your businesses and benefited some because of, say, the stay-at-home environment. But has it caused you, Daniel, to rethink the way you do business in any of these sectors?
Yeah, of course. We all know that the biggest lesson we have learned from the pandemic is how, the world we're in, how fragile that is. It has caused a lot of disruption in supply chain and in the, breakdown of the public health system. And it also has changed people's way of living. And we were talking about lockdowns and travel restrictions have impacted most sectors of the economy. And I'm not saying that we are not 100% not affected at all. On the financial asset side, the value of them might have increased. But in terms of our services to the real economy, we have been impacted, and we have to try to do different ways of serving our customers. And as many people have been talking about, I guess, sectors across the economy, and all of the financial institutions and organizations, we, for the last 2 years have all tried to become more digitized, to try to go digital in terms of their way of working internally, communicating externally, and offering their services and such. So it has brought great changes to the business community. And here in Taiwan, we are no exception.
I know the stock market in Taiwan has been very strong. Has that benefited you guys? And why has the stock market been so strong in Taiwan?
I think Taiwan economically has been least affected by the pandemic. We were very lucky because we closed down the border very quickly last year. And here people are very self-disciplined. You go on the street, people wear masks voluntarily. So we were able to stop the virus at the gate. So our economy was pretty much intact. In fact, we grew by 3 or 4% last year, and that of course was the foundation, the fundamental factor why the equity market has been performing very strongly, and we are an export oriented economy, and our export has been growing despite all this disruption in the world supply chain. So profit of most of the listed company had been growing quite strongly. There are some sectors like the hospitality business, which have been impacted. But you know that for example, the world is now facing with a shortage of semiconductors, and the prices of semiconductors have gone up, and orders are backing up like crazy. And so, leading companies here in Taiwan like TSMC, its stock prices have to go up, and many other its ecosystem companies here in Taiwan have all benefited from the strong demand globally for ICs.
Yeah, Taiwan Semiconductor obviously become a very important global player. I do want to ask you about Taiwan Mobile, which you mentioned, Daniel, and how that business is doing and how the sector is doing.
I always like to tell people that when we started out as one of the private sector mobile operator here in Taiwan in the late 90s, Mobile was a very sexy business. It was growing very fast. As penetration grew from 0 to over 100%, and the technology in those days, because of the invention of this mobility, of ubiquitous mobility, had make us look very tech savvy, as a company. But that was the 2G GSM old days, when ARPU was growing, total revenue was growing. The 3G, then came 3G, and it was okay because it brought the usage of data, which had also given us quite high growth. But then 4G came, and 4G, we know that make the mobile internet exploded, and it has created a lot of the so-called platform businesses. They are all very big scalers using the mobile internet connectivity that mobile operators like us have been providing. But somehow we have not participated in this migration of value. We became dumb pipes. We spend the money building out CapEx, building out the network, and enable all these tech, so-called big techs. Most of them, other than some of the hardware companies, are the so-called platform companies, and we all know how greatly they have performed. But we were left with not even a breadcrumb as a mobile operator in total. And here in Taiwan, we are particularly even hurt by the so-called unlimited data rate plan, because as a small economy, we have 5 players. So, the price competition is so severe. And before we could even could have even recovered the capex in building out the 4G networks, now comes 5G. We have to spend more bidding for the spectrum, spend even more building out. We all know that the 5G network is more expensive than 4G, but we have high hopes that in maybe a couple of years we will see a diversity of new applications, combining technology and telecommunication. People are talking about metaverse. This any services in the metaverse universe would have to be enabled by our connectivity and the so-called edge computing and low latency and all of that. So we are hoping that we have missed out the last opportunity. Perhaps we should try to be more active in participating in the invention of the next wave of new technology combining with telecom services.
Right. Fubon is the first Taiwanese bank with subsidiaries in China. Tell us about doing business in China and how that's changed and what the outlook is right now. Big topic.
Yes. Well, we have tried to crack open the China market because here in Taiwan the financial services market is very saturated. So if we want to grow, we have to go outside, and very naturally we were planning to go to China. Same language, same culture. We thought that the experience we had here in developing what we thought was more advanced financial services would give us a head start over there in China. But that it's very difficult to get entry into China. So it took us a very long time to try to gain entry, especially the very complex cross-strait political situation. Sometimes it's not just China. It could be Taiwanese regulator or government pulling your leg, preventing you from going too freely into China. And once you were granted entry into the Chinese market, I always want to describe that then you start to bump into many what we call glass doors. You looks like the doors open, but you go in, there are many layers of glass doors, and you have to try to open those glass doors without breaking them. Breaking them meaning breaking the rule, and then you are doomed. So the growth in China for us has been very, very slow. And the Chinese, I have to say that on the one way saying that they are opening up the market, on the other because of they set up all these glass doors, have created even global financial giants much larger than we are, have trouble developing their businesses over there in China. Well, we know that Goldman, JP Morgan had all just got their 100% ownership of their securities business in China. But that was, that was 20 years late. The market over in China has been different. We know that this new regulatory actions, I don't know if against is the right word, towards many sectors like private education, like social media, like gaming, or even the entertainment industry is now under a different set of regulation. So China is moving. It's like a moving target. If you're trying to do business like shooting an arrow, you are really shooting at a very moving target. But after all, it's a very large market and it's still growing. Therefore, I don't think that we should, give up. We would have to, and we've spent already so much time and energy. We have to try to do more. We have to cope with the regulation and find our own niche. In a big market, you can be, thinking of a higher percentage of market share, but you can try to be a niche player, as China is trying to make its society or nation a more, common prosperity one, or one with more common prosperity. I'm sure that serving the little guys, the smaller businesses, is a way to go for us.
Yeah, let me just ask a quick follow-up question, Daniel, about China, and that is, what do you think its growth prospects are given this new regulatory environment, common prosperity? We saw GDP growth there was a little bit slower than anticipated. How optimistic are you about China overall?
Well, I'm still, I have to say, conservatively optimistic. China will have its problem. Its internal political or geopolitical problems, and it will have its own set of social problems. It's a different system. It's one that many Westerners cannot fully understand. But it's a big country, and it has to have a way that it can function on its own, and so that the society can have more stability. And I think to make everybody rich is still the guiding principle of the Communist Party over there. Even they call it common prosperity. They first started wanting a few to get richer, but along the way they want the richer people to help the more poorer, and they thought that the richer people have not done that enough. That's why the state had to step in and create more. And the whole world is faced with this inequity problem. But China is tackling it with its own different way because of its very unique political system. In other countries, the state, we will have many people asking the government to take actions, but when the government wants to take action, there are many oppositions, and so then you have to try to reach a compromise so that everybody can move in the same direction. China is different. That's why I think China will have its problems, will have its challenges, but its economy will continue to grow. It's a huge market, and in fact, this disruption or decoupling of supply chain may not hurting them. It's making them want to be more self-reliant and want to be more independent. And in the long run, that may help them rather than hurt them.
Right. I want to shift gears a little bit, Daniel, and ask you about Warren Buffett. He has built a massive holding company that initially branched out into the insurance business. Fubon similarly began in insurance before it went into banking, media, and other ventures. Do you consider Berkshire Hathaway to be a model for you? And have you learned lessons from Warren Buffett?
Funny you mentioned it. The first time I ever heard of Warren Buffett's name was, I have a business partner, my younger brother. He's the one who said that we have to model after Warren Buffett. I said, who is Warren Buffett? The only word I understand is a meal that you go to, Buffett, buffet, So this guy's name is Warren Buffett? And he said, yes. And I asked him, what does he do? He said, he's like us. He's an insurance company. But of course, the law and regulations in the States are different from the laws and the regulations here in Taiwan. We are not allowed to own more than 10% of a listed company, for example. We cannot even nominate or vote for directorship on a listed company. So we would not be able to do the things that Warren Buffett or Berkshire Hathaway has been doing. But definitely it's commitment or its religion in making long-term investment, in making an investment in a company that they think will never disappear, in long-lasting businesses, and they take a very long view on investment. This is something we have to try to learn and model after. After all, I think all people in the life or in other insurance businesses must think of Warren Buffett as their teacher.
I want to ask you about a specific investment, and that is a $64 million round in the U.S. battery maker Nanotech Energy, which makes batteries for electrical vehicles as well as consumer electronics. Tell us about why you did that and why you're optimistic there.
We all know that vehicles are going to be electrified. This is the trend. And because of the climate change crisis that we are facing, and Europe is even going to ban selling of internal combustion vehicles very soon. I believe it's 2030, if I'm correct. So, getting vehicles electrified is a huge thing. The largest contract manufacturer is called Foxconn here in Taiwan. They just had their technology day, launching 3 models of electrical vehicle. But we all know that electrical vehicle is powered by batteries. And the biggest defect of battery, traditional lithium battery, it would go on fire. It's flammable. So to make battery not only effective, high performance, but safe is a huge challenge. And we somehow came across nanotechnology, this company, and it uses graphene, pure graphene in making inflammable, non-inflammable batteries. And they are the first company to able to make pure graphene in mass production, in scales. So we also the material, because it's natural. I'm sorry, I'm not a material scientist. I can use too many technology to describe how great the product is, but it's thin. It's a small area and it's highly conductive. So it has many other applications. Like shielding of electromagnetic wave, things like that. So we think that this company they are building our new factories in the States, ramping up production to help the battery makers. So I think the company will have a great future, and this is the type of investment why our life company have to invest also outside of Taiwan, because we are a small economy, and the problem with a small economy is our market is not enough to support any real disruptive innovation. We may have small innovation here and there, but our market is not large enough to support a large scale technology innovation. That's why we have to look outward. We have to look for technologies which would benefit, not only Taiwan, but the global market as a whole. And Taiwan, as we were saying earlier, is export oriented, and all these export surpluses have turned into domestic savings. And the interest rate here in Taiwan is very low, and direct investment opportunities are not a lot for individual investors. For large companies like Foxconn and for TSMC maybe, but for small retailers, their money has nowhere to go. The savings rate is so low, but they still save. So collectively, individuals here in Taiwan have been investing overseas, but mostly in financial assets. That's why, as a life insurance company, we kind of aggregate also savings from the individuals, but we have way to help them invest, not only in financial assets, making bets or arbitrage in interest rate, but we can also help them invest in real economy. That's why we, or as I was saying earlier, in innovative technology. So we invest a lot directly in new technologies, and we try to also do all sorts of alternative investment like PEs, infrastructures, and all of that.
As we wrap things up here, Daniel, I want to ask a personal question or two. You got a bachelor's degree in Taiwan before coming to Georgetown University to get a law degree in the United States, then went back to work for Fubon. What were your years like in the US? And did you pick up anything specific that you applied to business when you went back?
Well, that was a long time ago. I went to the States in 1978, right out of college, and came back after my graduate legal study at Georgetown, and I also worked in New York as an underwriting trainee for an insurance company there for a year. So I came back in 1981. That was also a long time ago. So I was in the States working plus going to school for a total about 3 years. I have to say it was the best 3 years for me. It for me in those days, going from Taiwan to the States is like a door or a window open to a different view, you know. And I was a young man, and I could, as a young man, I think the benefit of being young is you learn things very fast. So when I came back, I used to, you know, tell people, boast to people that, you know, I'm one of the few in Taiwan who have learned insurance in English. Because when I worked in New York, my company sent me to, I remember, it's called Insurance College, and it was still at 123 Williams Street. That was an old address, you know, some 40 years ago address. So, you know, that was the first time I've ever had a chance to come into contact with the knowledge of insurance. And I was very happy that I learned it in English. As we know, even all the policies worldwide in Marine is still in English. And my father was very wise. In those days, if you were a law student in Taiwan trying to go abroad, as you know, we are a continental law country, so we don't go to Anglo-Saxon law legal system country like the U.S. We would try to go to Japan, go to Germany, to do our graduate study. But my father had great visions. My father said that the global commercial language will have to be English. Why don't you go to the United States and try to learn some English? It will be very helpful eventually if you take over the family business. And I have nothing but thankfulness, gratefulness to his great vision. It has really benefited me a lot. You know, I still read English newspaper, especially the business section, almost every day. Every day I learned what's going on outside of Taiwan, because especially after the pandemic, you don't get to go out. So what do? Of course, you watch some news, but most of the more in-depth knowledge you gain from what other people are doing outside of Taiwan. I gain it from reading a lot of articles in English.
Daniel, you mentioned your father, and I just want to end on that note, if we could, which is you talked about
I'm sorry. You could see him behind me, still watching my back.
He's got your back.
Picture. That's the picture of him. I'm sorry. On the other side of the.
Right. Got it.
Yeah.
He insisted that you go and learn the English system, the American system. Any other lessons that he passed the company on to you and your brother, obviously? Any other lessons that he imparted to you that you think are so important?
Yeah, well, he used to say that there are 3 principles that you have to adhere to when you run the business after me. You know, my father started out as a founder of a very small property and casualty company, and look at where we are now. We have almost bits and pieces of business here and there, and it's size-wise is no comparison to where we just started. And it's very simple, because we started out as a P&C insurer. So he said that you have to be do your business honestly. As we know that the contract insurance is the contract of good faith. So you have to, honesty comes first. Then Chinese all want their children to work diligently. He says, secondly, you have to work diligently. And third, you have to try to be humble. Once you are successful. It's very Chinese teaching, but it has new meanings too, like being humble. Nowadays, you look around and look at the climate crisis we are in. You know that the so-called being humble is not just being humble, to your friends, to your co-workers, to the people around you, but be humble to nature, to try to live, coexist with nature. That's what I think that all of his teaching had, you can find new meanings in it and apply it to what you are doing today, business-wise.
Daniel Tsai, Chairman of Fubon Holdings, thank you so much for joining AMS Asia.
Thank you. Thank you for your time.
Jane Fraser is Citi's CEO. She's the first female chief executive in the bank's history and joined Citi in 2004 in the corporate and investment banking division. Fraser manages one of the world's most global banks, serving millions of consumers, businesses, and institutions across 160 countries.
Hello, everyone. I'm here with Jane Fraser, Citi CEO. Jane, so nice to see you.
Oh, wonderful to see you, Andy. Thank you so much for inviting me.
Of course. So Citi just announced strong earnings with profits up about 48% year over year, driven in part by big returns in equity trading revenue and M&A. So much of a difference, though, during COVID when you're doing business. And there are some tailwinds that you have, actually. And I'm wondering how sustainable those numbers are as we're coming out of the pandemic.
Yeah, look, I've had the advantage as we come out of the pandemic of getting on the road a lot recently. I've been in all sorts of places, Mexico, London, Germany, Kenya, all over, and getting a lot of color from the clients on the ground, because there's nothing like engaging with them as well as with our investors. And what I'm hearing is a lot of confidence from the clients. They have a lot of liquidity on their balance sheets. They're feeling good about their health, of their financial health, and therefore they're using this liquidity to drive capex. They're using it to drive M&A. They're using it to drive growth. A couple of geographies we're seeing some deleveraging, not surprisingly, in China being one of them. But I think it's that, together with the consumer savings, particularly in the States, being so high, that you have these engines of growth. But despite some common concerns that we're hearing around, supply chains and inflation and labor markets, which I'm sure we'll touch on. But despite that, I think these are going to be important engines. So from our point of view, robust pipelines heading into the end of the year, into next year. And also, for us as a very global bank, a lot of work on strengthening supply chains for our clients around the world, and both strategically as well as tactically. And that's also quite an important growth driver for us. So I'm feeling cautiously optimistic, Andy.
Nice to hear that, Jane. You touched on a number of things we want to get back to, as you're saying, supply chain and labor shortages and all that.
Yeah.
You took over as CEO in February, is that right?
March the 1st, so yeah.
March the 1st, right, okay. And you've been busy, you've undertaken a strategic refresh. So what areas of the business do you see as offering growth opportunities, and what are you getting out of, and what's driving those assessments?
Yeah. Look, I think as any new CEO, you do take a fresh look at your strategy. And I think particularly relevant given how COVID has accelerated digitization in the industry. So competitive landscape looks different in the decade ahead. Scale and scope and speed has also increased greatly. So with that, how do we change our business mix of the bank to make sure we're as well positioned as possible? I have a very important returns gap with some of my peers that is a very high priority to narrow, but also how do we run the bank better? So the types of areas we've been looking at, we've done a very clinical review of the business. I think a number of different areas we're excited about. We are the world's most global bank. We move $4 trillion of volume daily. I mean, it's a mind-boggling number. And it's in areas such as foreign exchange, cash management, trade, really the heart of the global flows in the economy. I see that just growing, continuing to grow in scale and speed. So a lot of the strategy is looking at how do we make sure that we're modernizing the whole bank to be ready for that. That affects talent, risk and control, that affects your tech platforms, last mile. So quite a bit of a focus on the strategy, on the how. In terms of areas, I'm excited about Asia, I have to say. And that one I know we'll go into deep dive in, and I'm sure, but there's a lot of wealth creation happening there, tremendous amount of innovation and the number of unicorns being created. So there are a number of waves to ride there. We're particularly excited in our commercial banking operations, in our wealth management businesses, as well as in the way that we connect different markets in Asia together and the intra-regional flows, as well as the flows around the world. So, a lot of areas to be excited there. I think it's true everywhere else around the world in those same areas, but I'd say it's that global flows, wealth, commercial banking are sort of the big growth areas for us, as well as retaining our leadership positions in the other businesses that we're focused on.
Well, let's drill down into Asia then a little bit.
Yeah.
Not a homogeneous region at all.
No.
And so I'm wondering, sort of top down, what your strategy is, say graphically A, and then product B, sort of a matrix view.
Well, I mean, I'd start off by saying we've taken a pretty hard look and very early on made the call actually to exit our consumer banking franchises in Asia. That's a part of the business that I think is very locally driven, and that while we've had big strengths in that historically, I would rather focus our shareholders' money in the capital into the areas I think we have a competitive advantage. So we're exiting our retail franchises in Asia, and in monetizing that value, excess capital will go back to the shareholders. Then when I look at the Asia markets themselves, across the board, you're right, different geographies, you're seeing some differences, but I'd say it is the epicenter for wealth creation. We're seeing this in terms of a rapidly growing middle class, therefore we're focused on wealth. We're seeing this in half of the world's unicorns have been created in Asia. So it's also driving our mid-market businesses as almost like an elevator for clients in the mid-market. Many are born digital, rapidly become Asian players, not just their domestic players. And we're seeing the time frame from birth to IPO in Asia for most companies being 6 years, which is an astonishingly short period. And then finally, what we are again seeing across the board is this digital acceleration. It's being powered by e-commerce, it's been powered by technology innovation. And so, all of this activity that's occurring of transformation means for us, and I think for our peers, wealth, being in this epicenter of that wealth creation, being in the epicenter of digital and technology innovation is really critical. And I'll give you an example. I was sitting down with the finance minister of India this weekend, last weekend, sorry, time flies here. She was in town for the IMF, and we were talking about the fact that Citi serves 50% of the unicorns in India. We serve about 30% of the multinational companies in India, and how incredibly vibrant those markets are and how digital that has become in the last few years. So I think these trends are going to be the same no matter where you are. And we're also seeing the recovery from COVID starting to accelerate. I was pretty encouraged to see ourselves, we're starting to bring people back into our sites again after the second surge of COVID in India. And we're seeing it beginning to see a stronger recovery there after a pretty brutal few months in many geographies in Asia from a COVID perspective. I'm bullish, as you can tell.
I can tell. Let me follow up, though, and ask you about China specifically, Jane. You set up a commercial banking desk in Singapore to help emerging Chinese companies expand across Southeast Asia. But I'm wondering, sort of understanding, judging, and then figuring out how to play China must be very complex. And I'm wondering what your thinking is.
Yes and no. We've been in China, I think it's almost just over 120 years. So we have seen China through many phases. We're on the ground there and have a long history in the country. So that does help. And we serve many of the multinational companies, helping them do business on the ground, and many investors doing business on the ground there. What I'd say about it is that clearly it's undergoing material shifts, as it has done, and has taken some pretty impressive strategic shifts over the last decade. When you think of the pivot to more of a consumer-oriented driver and more self-sufficiency of their growth, as opposed to the dependency on export and infrastructure. And that's obviously one that the government is pursuing quite aggressively right now. That does mean slower growth, and I think there's some concern about overheating in China right now. There's a focus on deleveraging for sure, but as we look in the longer run, it's going to certainly be a major engine of growth for the world, as it has been. But I think it's come off the boil for sure. But I think bubbling away too ferociously isn't great either. So I mean, we're looking at it with some caution in the immediate term. But in the role China will play in the world is only going to increase in its importance, and one we'll all have to manage carefully.
That phrase you just said, Jane, "come off the boil." I picked up on that from the earnings call. You used that phrase. I don't know if that's a Scottishism, but
it's a love of cups of tea.
Got it. And so it means things are slowing down a bit, or there's some concerns, a little bit of headwinds. You just talked about China, but I want to ask you about some of the domestic and other global factors as well.
Yeah.
We talked about supply chain. We've talked about inflation, debt ceiling negotiations.
Yeah.
What's concerned you the most? And maybe we could talk about inflation, because that concerns a lot of people.
Yeah, I mean, I think we've stopped hearing people saying transition or transitory, because it's feeling a tad longer than that. However, if we look at the causes of it, they are ones that the world economy will work through. I mean, we did have an extraordinary dislocation in COVID, and I think pat on the back to the world economy about how incredibly it was responded to, both in terms of the regulators, from the support given to the markets, down to our clients around the world, and indeed our people. But it's going to take some time adjusting, and we don't go back to the way it was. We're going to a new normal as well. And I think the strength of the recovery in the first half of the year everywhere around the world was better than anyone expected. But the result of that is demand was very, very strong. Strong from consumers, strong from corporates, and our supply chains therefore has had some pretty severe dislocations, from logistics all the way through consumer hoarding, all the way through higher consumer demand, to other dislocations in the both demand and supply of materials. This too shall pass. It's going to pass probably in 2022, and we're probably in for a bit of a brutal winter, particularly in the energy markets, where there's also some challenges there. But it's not long-term structural stuff that we won't adjust to. I'm certainly more concerned that it could become more sustainable, because inflation is sustained. It is unquestionable. I think the word someone used the other day, that we're certainly having episodic inflation. Unquestionably. The question is therefore, does this become something more sustained? We won't know till next year. I don't think it will become a big issue, but it certainly is something that's going to be choppy for the next while, and it won't be helped if the US debt ceiling situation doesn't get resolved on a more timely basis before December.
I want to ask you about employment and specifically, and workers and working specifically at Citi. Two-part question, Jane. One, back to work, how is that going? 2 days a week, vaccines and all that, number one. And then number two, are you having a hard time simply hiring people?
Yeah, look, it certainly depends all around the world. So every market is a little bit different, depending on vaccines, depending on what's happening in terms of health in the local geography. So sort of one size doesn't fit all in the equation we're looking at. But what we are seeing is from the workforce, people don't want to go back to where they were. There's a feeling of they've changed. I've changed and I want things to be a little bit differently, and we've shown some more flexibility does indeed work. We do want people back. We do think there is tremendous value in being together. It's important for apprenticeship. We can see it with our kids. Anyone who's been doing homeschooling, it's just, the kids learn more in school than they do in the home environment. They learn other things, important things at home, but it's just easier. I think it's the same way for, in the work environment. We learn a lot from each other. Helps for coaching, it helps for collaboration, it helps for others. But flexibility is also very important to our people. And so for us, it's a balance of the two that we want to give folk. Come back together, but we're going to give you more flexibility than it was before. And I would say that seems to be working. I know it worked for me when I was a working mother. I needed that type of flexibility myself, and I didn't feel that it needed to interfere with my effectiveness as a professional. So I think that's how we're looking at it. I would say that's been successful for us in being a magnet and somewhere attractive for people to work. That said, right now, the labor supply is incredibly tight. So when we're looking at we look at people who are working in an operations center, haven't had to commute, they haven't had the costs of that. They don't necessarily want to come in every single day, and they've got the setup for a call center right at home. And we can see whether they're being productive or not, or need to come in for more efficiency. So I think, again, by mid next year, some of the labor supply will have worked its way through, but it's a very, very tight market at the moment. And it is one topic we talk about when I jump on the phone with our CEO clients, which we do all the time. We're no longer talking return to office, we're talking tight supply chain. And I think it will be the first topic for a while longer.
Retaining those employees.
Yep.
First retaining them, and then after that, trying to hire. Shifting gears a little bit, Jane, I want to ask you about another huge topic, and that is crypto and decentralized finance. And I guess I want to, as a CEO, I can ask you sort of the big strategic question. How do you view this nascent, incipient world that is obviously affecting your bank and your business? And how do you plan and move forward?
A topic we spend a lot of time discussing with many of our partners and clients as well. So I think you start off with a premise. It's clear that digital assets will be a part of the financial services and financial markets, the future of them. We already see clients very active in the space. Real-time payments are both in the sense of they're frictionless, they'll become more global, they'll become ubiquitous. Real-time payments will be here in the near term, and digital currency is maybe part of that future. We see benefits from the digital asset space, instant processing, fractionalization, programmability, and transparency. Very geeky words for geek like me. I love them, but those are very tangible benefits that come from it. I would say we're proceeding thoughtfully and with appropriate caution here. Why is that? There's still a lot of questions about how the space evolves around regulatory clarity around some of the scalability, around resiliency, certainly around some transparency, and making sure that there are the appropriate guardrails in the system, particularly for our retail clients. We don't want them participating in areas that they're not necessarily as well equipped to understand the risks of. So for me as a CEO, I'm working to connect our clients to wallets. We're enabling our businesses to and our corporate clients to accept consumer payments. We're building the infrastructure for retail real-time payments, but we're doing so cautiously because the space is moving so quickly, and not all the guardrails that you would like to see are yet in place. And as a banking CEO, I do believe guardrails are important and necessary for the safety and soundness of the financial system. And so I like them there for resiliency.
That provides a nice segue to my next question, which is the regulatory environment and the relationship of Citi to Washington and the banking sector writ large to Washington. What would you like to see out of Washington, D.C. that would be most helpful, Jane?
I think it's what we're talking about. We're seeing this world move, unbundling from the old financial architecture, and that's from currencies all the way down to deposits, and it's moving to new digital architectures. They're largely born digital, so outside of trading and some of the more institutional spaces, there's a real disconnect from one architecture to the other. It's not an evolution, and therefore we've got to transfer the wisdom, the knowledge, how to make that system work well and safely and soundly from one architecture to a new one. And I think it's one in which our regulators are clearly very focused on this. Washington is very focused around this, from the central banks around the world are. And I think it's that we continue a constructive and active dialogue between public and private, between the fintech and the banking world, to make sure that we have a system that will capture the benefits of these new technologies, but also one that will work in the way that's in the best interest for everybody and doesn't have recklessness in there. And so far, a very constructive dialogue. I think we all need to be highly engaged and listening to everybody on this front.
A couple of questions about ESG, Jane.
Yep.
First of all, you guys announced $1 billion in strategic initiatives in the aftermath of the murder of George Floyd last year to help close the racial wealth gap. Can you talk about that, number one? And then number two, you guys have committed to phase out financing for coal power by 2030, although not with oil and gas. So can you, that's a lot of stuff there, but can you
yes.
Each one of those, please?
Yeah, right quickly on the racial equity. So in the US, we announced $1.25 billion, really to support the closing of the racial equity and wealth gap. We've done some important work that showed in our research departments that if that gap was closed, the US economy would be $5 trillion bigger. I mean, that's a benefit that lifts everybody up. This is a win-win for everyone of work on this. We put a 3-year commitment in. We're about a year and a half through, and we've almost completed it. So we will be re-upping the number before long. And it's focused on areas such as affordable housing, supporting Black entrepreneurs that haven't had the access to capital, working with our MDI and CDFI partners, so this is minority-owned banks, in accessing some of the communities that we don't have a presence in, and providing access to credit, and in ways where we're also partnering. So just very important pieces that we've been working on that lifts everyone up. I think similarly, when we look at our commitments around climate, when I look at what we need to do, it's very clear that we need to help the economy shift onto new technologies and onto greener technologies. That said, I'm very mindful that we also have an energy policy that's important in the play here. And getting that balance of making sure that we shift onto and help prove out new technologies, we develop them, we get the cost of these to come down. We've seen wind and solar come down dramatically over the last few years. These are all very important dialogues that we're having with our clients. So we don't want to jeopardize energy policy, particularly in emerging markets or in the developed world. But at the same time, we want to help our clients shift onto these new technologies and onto cleaner technologies and help them responsibly retire the other assets. So we separate out coal from gas, from oil, and we've made the commitment on coal. I've made the commitment for our firm of net zero by 2050, and we're working very actively on all the fronts, on disclosures, on understanding climate risk, on understanding energy policy and the needs of the world, and looking at how we can make this shift happen in a responsible manner, but make it happen. It's not an easy balance, but we think it's an important one.
Jane Fraser, Citi CEO, thank you so much for your time.
Thank you, Andy, for having me.
Pat Gelsinger is the CEO of Intel. He's a tech industry pioneer and played a key role in developing several groundbreaking technologies such as USB, Wi-Fi, and Intel's line of leading computer chips. Gelsinger was also Intel's first chief technology officer and the brains behind its legendary 486 processor. He rejoined Intel as CEO in 2021 after a successful run as the CEO of VMware.
Pat, always good to see you here. So you're 8 months officially into the top job at Intel. Now that you can look back a little bit, what are some of the three biggest changes you've made to the company?
Well, first thing was we rolled out a new strategy, right? We said very clearly, without ambiguity, we are going to be an IDM and we're going to be an IDM 2.0. As we said, and we're going to double down on manufacturing. We're going to become a foundry for the industry, and we are just on it to bring back our process and unquestioned process package leadership, right? So I said, number one, we just, semiconductors are important to the world. We are going to be the biggest, baddest semiconductor supplier on the planet. Secondly, we said, boy, we have to rebuild our execution engine. And to do that, I've laid out a new organization. I've brought in new leaders and said, here are the 6 business units that we are going to be focused on. Here's how we're going to align the entire corporate structure against that. We have leaders in each of those roles who I think are, not only super qualified for the roles that I've put them into, but maybe they're the best humans on the planet for the assignment that we put. I really think that we're building out the dream team for Intel. So, a team, a clear organization to go execute on that assignment. And then finally, we have to bring back the culture. I've called it the Grovian disciplines. We have to rebuild this, execution, this detailed, data-driven, engineering-driven, paranoia of the competition, commitment to our customers' culture. And, so we're underway on doing that. And, if I would have sat at the beginning of the year and said, hey, this is what I got to get done this year, I think most people would have said, okay, that sounds about right. Clear strategy, and as Colin said, get the bus pointed in the right direction, get the right seats on the bus, the right butts in the right seats on the bus, and then the right, say culture, camaraderie, commitment to the future. I think we're on track to what I said we'd get done and maybe a bit ahead of schedule.
It sounds like a turnaround is brewing at Intel, Pat. Why is Intel in a turnaround? I think leadership in what it does. How did the company get here?
Yeah, I think over the decade, some bad decisions, lack of, I'll say, manic technology focus on the part of the company, business leadership, not that they were bad, but they were business leaders. They weren't technology leaders. Some stumbles around the process technology roadmap, lack of clear leadership in the products, and, underinvestment in some of the key areas like our manufacturing and capacity. So all of these sort of accumulated together to get the company to a position that it wasn't a leader, and didn't have that sense of iconic leadership, the company that put silicon into Silicon Valley. And in the period where silicon is becoming more important than ever to the planet, it's time for us to not only turn around but step up and to unquestionably lead.
Is part of the secret to this turnaround, Pat, you started at the company at 18. How big an advantage is it that you have that insider knowledge of when Intel was great?
Yeah, and I'd say, I think there's people that could do this job beside me, but I think I'm qualified, right? And the 30 years that I had with the company, when I say Grovian, half the company knows what I mean, right? And there's so much that depth, and I grew up at the feet of Noyce and Moore. I just did an interview of Gordon Moore, maybe the last interview he does while he's on this earth. When I can, with extraordinary depth of experience, passions, these sentiments, these understandings of some of the history of the company, and that's a big leg up. I'd also say the clear support of the board of directors. And, I was asked, well, how did you make some of these decisions so quickly? And I says, well, I started to make them in January when I was interviewing with the board, right? I had a clear thesis for what I wanted to do. And part of the calling of me was the unanimous support of the board for me and for the vision that we were laying out. So, that strength of conviction, and then, the ability then to sort of bridge the old, but also the experiences of the last 11 years being outside of the company, new cultural understandings, industry, software understandings, and combining those together. This is a good period, and one that I'm extraordinarily motivated as I come back to what I've called as my dream job.
Part of that strategy, Pat, is what you have called bring Intel back to unquestioned leadership by 2025. What does Intel look like by 2025?
Well, and everything is building from today to there. So it isn't like we're waiting till 2025 and voila, right? We are making progress each day along it. And, we'll be rolling out our Alder Lake products. Hey, that's the best desktop product. By 2025, we are talking about inching ahead of the competition, but having miles between us and the competition. It's about our process technologies where we're, sort of clawing our way back, and building this 5 technology nodes in 4 years, an extraordinary cadence of process technology where everyone in the world says in 2025, oh, whose transistors are the best in the world? Intel's by far. The manufacturing capacity that we'll have rolled out by then, the leadership that we'll have reestablished in the data center, and these 4 new business areas that I've talked about rolling out: leadership in accelerated graphics and GPUs, high performance computing, unquestioned leadership in the transformation of the network and the edge, unquestioned broad deployment of autonomous vehicles and leading the establishment of that category, and being one of the largest foundries in the world for the industry writ large. And by 2025, all of those businesses are going to be at scale, measured in billions of revenue and unquestioned leadership in their respective industry category as well. That's a pretty powerful picture of where we're going to be by 2025.
There's 2 theses out there, at least on Wall Street, that I see among many. One, the likes of an AMD and NVIDIA, these companies are just light years ahead. Poke hole in that one for me.
Clearly, we've given them room. We've given them way too much space in the market to be uncontested. And, as I mentioned with the client product, hey, we're about to release the best client products, period, that have ever been built. And we're not going to slow down. right? You know, in the data center, hey, we're about to release Sapphire Rapids, the best server part in the industry, and we're just going to get faster. You know, we're going to, start releasing the highest performance HPC and AI benchmarks in the world and start scaling those new products into the marketplace. Our customers are begging us, right, saying, hey, we want good alternatives. We're going to give them to them as well. And many of those products start ramping in Q1 of next year. So I think by the time that we're having this conversation late next year, Brian, I think the world's going to be really different.
So this leading position those companies have, I mean, they can't continue. It can't continue forever. I mean, tech is constantly changing here. But the street doesn't get it, I think, Pat. They don't get it yet.
Well, they're skeptical. Can we turn this around? It's been 8 months, right? How fast can these things happen? They've become the darlings of, many in the industry, and they've done well. We have to give them credit. They've had good periods of execution. They've done good things, but Intel is back, right? The geek is back. Our role, right? This deep, passionate view that we're going to deliver the best products. They're going to be high quality. We're going to scale them at volume. We're going to satisfy our customers better with them. And each one of these things is gaining momentum in the marketplace. So, I look at our skeptics and I'll say, just wait, right? Because we're building the evidence base that is going to take the worst of skeptics today and turn them into the most ardent of believers tomorrow.
As a veteran of industry battles, Pat, what would a NVIDIA and ARM deal, what does that mean to the chip industry? What would it mean to the chip industry?
Yeah, well, we've publicly said we don't think that's a great idea, right? We think that, part of the strength of the ARM ecosystem, has been the fact that it's nominally independent, right? And others can view it as that independent architecture. So, we've said, I don't think it's a good deal. So far, there's been a lot of skepticism expressed across a different set of industry groups, governments as well. So, we're doubtful it will occur as well. But if it occurs or not, hey, we just view it as one of those industry things, and our job is to deliver, the best products around the x86 family. We're using the ARM architecture in some of our product lines. We're going to make it one of the staple offerings of our foundry business. But we've also said we're going to have the richest architectural ecosystem of any, because we're going to have unquestioned leadership in x86. We're building out a full portfolio of AI capabilities. We're going to have the ARM and the RISC-V ecosystems available through our foundry offerings as well. So we will have unquestioned leadership on the most important architecture and, the richest offerings on all the other architectural alternatives as well.
I was thinking back, Pat, when you first started and we spoke early on, one of your first calls among many, I'm sure, was to Apple and CEO Tim Cook and trying to get, I guess some of that business back. Now that you've settled into the role here, what's the relationship with Apple like?
Apple's a great company. We certainly respect their innovations, and we do a number of products with them today. Obviously, they've moved the core of their product line to their own M1 and its derivative family, because they thought they could do a better chip, and they've done a good job with that. My job is to win them back and to deliver products that are better than they can do themselves. We also want to win them to more of our foundry offerings over time, and that just makes sense, right? Everybody wants to have multiple suppliers, and if we have the best process technology in the industry, of course they'll come our way. But we view these decisions are long decisions. They don't flip architectures arbitrarily. Nobody does. Those should be contemplated very carefully. So this is many years in the future. And between now and then, we are reviving the PC ecosystem. We're building out our foundry business, and we're aggressively pursuing unquestioned product leadership that our customers can build the best computing experiences of any available in the industry. And if we're doing that, we're just going to do fine over time.
Do you think it takes a couple of years to get a good chunk of Apple business back? And what could you get back?
Well, as I said, we would hope to have them using more of our products over time, more of our technologies in different spaces, hoping to use our foundry at different points in time. But these are long-term decisions, Brian. If they started the design tomorrow, if somebody came to us and said, hey, we want to go do a major foundry offering with you today, it's not till 25 that hits any volume. couple of years to make the decision, couple of years to do the design. These are long-term decisions. So, we're very, very, I think, pragmatic about what that might take. But we're also very clear-minded that if we're doing the best products, the best process technology, the best packaging technology that's available anywhere in the industry, they and others will make very pragmatic choices on picking the best set of things they can do to build the best products for their customers.
Let's switch gears a little bit, Pat. You've been a champion of the CHIPS Act. You have met with President Biden. You've been traveling the world. Why in the world has this not passed the House yet? I kind of could get a little bit, but this is needed and it's long overdue.
Well, you've probably asked a question that my political IQ is somewhat inadequate to fully answer the question. But, there's been a lot of things going through the House, with, dealing with debt ceilings and infrastructure packages and the other things associated with it. And, my government affairs team, many of the political insiders give good confidence that this will be done this year. And to me, that's critical. And I would say, everybody listening to this, tell your congressman you want this done this year, right? You don't get Christmas break until this is done this year. Get it across the line. Good bipartisan support, good bicameral support, get it finished. And I believe it's so critical. Here we are in the semiconductor crisis, and we've realized we've allowed so much of the manufacturing base to move to a very small and concentrated areas in Asia. And as I've said, the world needs geographically balanced, resilient supply chain. Semiconductors, as the world becomes more digital, semiconductors are permeating every aspect of human existence, every aspect of our economy, every aspect of our national security. This is more important than where oil reserves are. Let's build the fabs where we want them, Brian. Let's get this lab to fab supply chain where it meets our economic and national security interests. That message has resonated in the US, also resonated very strongly in Europe. We've seen the European version of the CHIPS Act making very rapid progress there. And we believe that this just allows us to rebalance the supply chain to assure the technology leadership of our nation, our industry, and the world.
Hey, if I can grab a shovel, Pat, and help you build some of these foundries, I certainly would. Two things to unpack there. If there is no CHIPS Act this year, how long does this chip supply shortage, which you mentioned is a crisis, how long would that continue?
With or without the CHIPS Act, we think we still have some rough road in front of us. And I've said, we believe the chip shortage is at its worst right now. It will get incrementally better as we go through 22, but we expect the shortage to persist into 23. It just takes that long to build capacity. Now, if the CHIPS Act doesn't pass, if the European Act doesn't pass, we think the slope of the recovery dampens. If it passes, I'm announcing our next fab, right? I mean, I am, shovels go into ground more rapidly if this gets put into place. So let's get it done at that level so that we can, increase the slope of the recovery more rapidly. But it's also, as Winston Churchill said, never waste a good crisis. If we come out of this and we haven't created the environment for a more geographically balanced supply chain and we become more dependent on Asia, right? How terrible, right? That we haven't really fixed the problem. And as we well know, some of these areas in the world are very geopolitically unstable. Let's build back better, right? As the Biden campaign included in its political process. Build back in the way that we want these to occur. The CHIPS Act is critical. We want these fabs on American and European soil, and we're ready to step up, build bigger and faster, right, with the investments of the government.
Is it a national security issue that so much of our chips are being made in China?
Absolutely. Right. This is an unquestioned issue. And I think everybody was somewhat lulled into sleep of the efficiency, the cost benefits of supply chain versus the resilience and the national content of the supply chain. And I think that, is one of the great wake-up calls that has resulted from COVID. And I think everybody is now starting to realize the precarity of the current situation. And we're encouraged by the enthusiasm we're seeing from, the intelligence, the defense community. And we would just call, everybody to say, let's get these things done. Let's build back much more rapidly. It's time for us to change the arc of how the industry looks, that as we go to the second half of this decade, we all feel confident. I've described this moonshot that today the US is at 12%, Europe's at 9%. We said by the end of the decade, let's go to 30% in the US and 20% in Europe, which would get us almost back to where we were in 1990, right, in US and Europe. And what a tremendous turnaround of momentum, right, technology, foundations for the most important thing for humanity. Everything is going digital. Time for us to make this change now.
Given that we are still so reliant on the supply chains out of China, as we have had this change in administrations, has it become any easier doing business in the country?
Not really. We'd say, largely the policies have sort of been, a continuation of the Trump policies. We have clearly argued that, hey, having more of our products shipping and available to the Chinese market, helps us to fund our R&D and our capital, right, which is heavily biased to US and Europe. So, let's benefit from that to go drive our investments in innovation. It actually creates more dependency on American technologies there. This is a good trade policy, even as we want to carefully, position ourselves for sustainable leadership in this industry for the long term. So, we'd say there's good trade and economic policy objectives that sit in front of us. And we're clearly working with the administration to make some of those steps. And, I think the political rhetoric, time to get past that. We need actionable trade and economic policies that allow us to not only continue, but increase our business in China, even as we, create more opportunities for competitive leadership in the world landscape.
Pat, if we're sitting in here 5 years from now having this conversation, hopefully it's in a studio. I'm not sitting in my home studio. Let's just call it that. After you can see my sink a little bit behind me. But what?
Hey, I'll take a cappuccino there.
Yeah, well, all right. I could duly get you one very quickly. But what do you think the long-term impact of the pandemic is going to be on society and even the tech sector?
So unquestionably, the tech sector has seen a large accelerant from COVID. Right. And we've seen, part of the reason we have the semiconductor shortage is, demand was increasing for semiconductors 5-ish%. COVID moved it to 20%. Wow. An enormous acceleration. It disrupted supply chains. They went negative for a year. Right. And now we're, building up. Semiconductor supply this year will increase 15%, but an extraordinary acceleration in technology. And we all know that. Right. Our kids are going to school online. We're all working online more. We're educating online. We're seeing more cloud services, Grubhubs and everything. Deliveries are, every aspect of our life has become more digital, and it's accelerating. And it isn't just some of those, I'll say consumerish things, but how do you think mRNA happened? I mean, it took us 35 years to create an influenza vaccine, right? We created mRNA-based COVID vaccines in under a year. This is because of computing technology, because of digitization of healthcare and medical research as well. So it's this extraordinary accelerant of the digitization of humanity. And as we think about that, when we're sitting here 5 years from now, there's going to be these things that we would have never dreamed of before. If you say over the last 20 years, my iPhone and my social experiences, et cetera, we're going to have many of those have become, hey, oh yeah, I go to the office every, once a month. We go in for our team sprints and things, but otherwise I work where I want to work because it's so productive, so effective, such an improvement in the quality of life. We don't think we ever go back, right, to saying we all show up, we all burn, hours a day in commute traffic. That's the exception, not the rule. We're going to see an explosion in how we educate online, how we provide care online. These social systems are going to settle into how our lives as we mix both physical as well as virtual. I call it the phygital, right, experiences of the future. So we don't think there's a going back. It's just a huge accelerant in the digitization of humanity.
What's your What's your message to other CEOs in that type of environment who are trying to plan for the long term? I mean, it requires a different type of leadership, a different type of executive, a different type of CEO. I would say even a different type of board of directors to be thinking about these new just things that are going to creep up.
Yeah. And, every business becomes a technology business, and I would say, let's just pick one example, AI, right? There's two kinds of companies. There are those that are going to embrace AI and advance their business, or those that are going to be disrupted by AI because somebody else is, right? You only got two choices. Which one do you want to be on? So every CEO says, how am I embracing AI into the core of my business? And with that, you need quality technologists who sit on your leadership team, right? And hey, as a technologist, when I have, half of my staff is PhDs now, it's much easier for me than for other companies to sort of say, okay, how are we doing wafer inspection using AI techniques, right? We have to embed it deeply into our processes every day. How do I better predict the supply chain using AI techniques than they ever were predicted before in this very disruptive time? So every aspect of your business needs to say, how am I leveraging what I've called the superpowers of ubiquitous compute, seamless connectivity, the scale of infrastructure and AI for superpowers? How am I bringing that into my leadership team? Right. And if I don't have it, go hire it. I need somebody who's sitting at that chair, who's driving this at the highest levels of every company into every business practice. This needs to become an agenda on the part of every board of directors. Okay, yeah, you need to make sure that have the audit committee approval, the comp committee approval, and the technology committee approval as well. And that becomes more important than the audit or the comp committee going forward. All of this becomes central to every business, and we're seeing that in many cases, but I think still many haven't yet realized the full breadth of what's going to happen to their business and their industries over the coming decade.
Well said. Well, Pat, I'm no PhD, but I do make a mean cappuccino and espresso. So, maybe I will have one sent to you. You have a big giant company to go run. Pat Gelsinger, always good to see you. Thanks for carving out some time for us. And maybe we get to share that espresso sometime in person soon.
I look forward to it, Saz. Thank you so much.
Thanks, Pat. Appreciate it.
Hi, I'm Isabel Wong with Yahoo Finance, and here with us is Dr. Alan Zeman, founder and chairman of Lan Kwai Fong Group. Dr. Alan Zeman is widely known as the father of Lan Kwai Fong, where he revolutionized the nightlife scene in Hong Kong. He was also the chairman of the board of directors of Ocean Park from the years of 2004 to 2014, where he transformed the loss-making operation into one of the world's best theme parks in 2012. And in this conversation, we're going to hear from Alan about his views on the rebooting of the hospitality industry and also the growing Chinese market and beyond. Alan, thank you for joining us.
Pleasure to be here.
Now, first of all, I would like to start off the conversation with the reboot of the hospitality industry, because obviously LKF Group is the biggest landlord for bars and restaurants in the Central District of Hong Kong. And could you please give us a sense in terms of how LKF Group and its tenants are doing so far after the COVID pandemic? And do you see any signs of recovery?
Well, in fact, I'm embarrassed to tell you, business has never been better. Obviously, when the COVID first hit in Hong Kong and we went through the different phases, it was a disaster. I mean, literally, many businesses were going bankrupt. Many people didn't know how they're going to survive. And as a landlord, and I know many landlords in Hong Kong were very tight. They did not reduce anything. They didn't want to help. I just felt, and I've always been known as a landlord with a heart, so I just felt, what's the point of putting the tenant out of business? And I'd have to look for a new tenant when at that time not many people were renting new spaces. And so I worked with them. I worked with most of my tenants at the time, and literally gave discounts on rents and literally in some delays on payment and that kind of thing. So really trying to understand the problems that they're all facing. In effect, until obviously the infections turned around in Hong Kong. Obviously, the last 4 months, basically, almost 4 months, for local, we've always had almost zero infections. And so the mood, the atmosphere changed in Hong Kong. I'm embarrassed to tell people, but as a landlord, I'm 100% leased. Even during the good times, normally you're about 93, 94% leased, never 100% leased. I've got a waiting list now of people wanting to get into, wanting a space, and as soon as one comes up, it's easy to rent right now, and rentals are actually not bad.
Right, this is actually definitely a positive note to hear about how the F&B industry might be coming back very soon. But of course, Hong Kong still has social distancing restrictions in place. And as you mentioned, it has some of the strictest travel restrictions. So are you still seeing these policies in place impacting businesses for the entertainment and F&B industries? And do you see profits coming back to pre-pandemic levels anytime soon?
I can tell you, as long as people cannot travel. They, even hotels have come up with staycations. Ships are now having a trip to nowhere. People have invented, businesses have invented a new way of staying alive, basically. And so, as I say, for us in general, profits have been very reasonable, very, very good right now. For restaurant operators, bar operators, I can tell you the club business in entertainment has been crazy. In general, it has not been bad because rather than tourists coming to spend, we now have our locals spending. And the economy in Hong Kong has actually recovered pretty well. The jobs, are pretty low right now for people not having jobs, and GDP has come back pretty strong.
Right. Now I would like to talk about the growing Chinese market because this year Beijing has been ramping up effort in terms of cracking down on a few sectors, namely tech, edtech, and property, as well as their de-risking campaign. So from all these actions, what kind of signal can we pick up?
We can pick up a signal that Beijing definitely has a different culture than the Western world. There's something called common prosperity, which Beijing feels within their system. You want to share the wealth because of what's happened the last number of years, not just in China, but all over the world. You have this divide between the rich and poor. The rich have gotten much richer and are getting richer and richer, and then the poor are getting poorer and poorer. And so this causes a lot of dissension for any government, whether you're in the Western world. China is about, if you understand the culture, it's about stability. It's about keeping a stable market, keeping socialism is with Chinese characteristics, really is making sure that everyone is looked after, no matter where you are. And so that was one aspect. Property, they then turned to property. Property prices were through the roof, and people, it's not unlike what we have in Hong Kong, one of the problems we face in Hong Kong. And so I guess the government just decided that same thing, we have to start really cracking down on the so-called free market because not everybody could benefit by it. And I know to a Western company or Western world looks at it and says, oh, this is draconian and this is terrible and we can't do that. Well, it's a different system, but at the end of the day, it's more equality. It's really what socialism.
Right. Now I would like to shift the focus to a little bit on the Macau casino operation tightening. And in your view, how should the gambling industry in Macau be overhauled? Because obviously, you as the non-executive chairman of Wynn Macau, what do you see will be the implications for casino operators?
I think I don't think anyone really realized the extent of the market, how big the market can be. And I think that China learned a lot, Macau government learned a lot from the last 20 years. I think that one thing for sure, China and Macau, they want stability in Macau, in the market. They now understand the capability of the market. I believe that any of whatever comes out at the end will really benefit the market, will really be for the benefit of the long-term stability of Macau. Listen, some operator might not like it. No one likes change usually. Every company, it's a normal fact. But changes will be coming. But again, as I say, it'll strengthen the market. Government has said in the past they want non-gaming as well to be a very important part. If you go to Las Vegas at the moment, I think 60% is non-gaming and 40% is gaming in Las Vegas. So rather than just be 100% gaming in Macau, I think the government's been urging people to do non-gaming. Now as well, Macau is changing.
Now, some personal questions for you, Alan. Of course, you made your first US million at the age of 19. And ever since, you've been a serial entrepreneur. So what are some of the most important lessons you picked up along the way?
I think the most important thing is no matter how much money you make or what you do, always keep your feet on the ground. Remember, think out of the box. I have a saying, I look at things not for what they are, I look at things for what they could be. And if you look at the successful entrepreneurs, they always see things that other people don't see. The entrepreneur who's successful will look beyond and say, wow, listen, I take Steve Jobs for argument's sake. The late Steve Jobs was brilliant. I mean, he was not a technician. He couldn't put a phone together, but he was a marketer. He was a salesman. He knew what he wanted, and he knew how to work with his technical people to create these wonderful phones. And rather than just build a phone like Ericsson or Nokia, one of the early phones, the big clunky black phones that had no style, he created an apple with a bite out of the apple as a logo, and literally just challenged his experts, the technicians, to really create something that was sexy, create something that really looked good. And obviously we saw the success of a company like Apple, and we saw where the other companies that originally came up with the idea fell apart. So as an entrepreneur, I've always felt, think out of the box, think differently, and don't get yourself into trouble. Don't always look at the upside. Also look at the downside. If you cover the downside, the upside will take care of itself. And so these are basic principles, and then basically surround yourself with a good team. No one person can do everything themselves, and no one is smart enough to do everything themselves. I've met some of the top people in the world. Trust me, they're all human. They're all the same at the end of the day. And so I've never thought I'm better than someone or whatever. We're all the same. We all go to the same place. We all come from the same place. So just while you're an entrepreneur, put a good team together, and then make things happen. Good marketing ploy, and always think like a customer. Don't think like a boss. Put yourself in the eyes of a customer. Look at your product. Would I like this program? Would I like this? What is this all about? And if you think it looks good, challenge it. If you think it looks good, then go for it. And that's the way I've always looked. I've always thought like a customer, not like the boss.
Right. And with that said, finally, more than 30 years ago, you found an alleyway and turned it into the most vibrant nightlife district in Hong Kong. Yes. So are you looking for the next alleyway? Where will the party be, Alan?
Well, I'm a party animal, even though I don't drink.
That's true.
I drink water. And that's a funny thing. The father of Lang Wai-fong only drinks water. So there's hope for everyone. But, as a businessman, we're always looking at new areas. Hong Kong, of course, is always changing of the new vibrant areas. Now government's looking at the northern part of the island, closer to Shenzhen. We've been building, I've had a Lan Kwai Fong in Chengdu in China, in Sichuan province, for probably 14 years now. And Hong Kong, I don't forget about Hong Kong. We just actually are building residential. We just bought some land in Sai Kung and building residential villas in Hong Kong resorts. We have hotels and just finished a golf course in Phuket in Thailand. And so as a developer, I love making people happy. It's from my days at Ocean Park and Lan Kwai Fong came along. I love making people happy and really, because everyone works so hard during the day and stress from family, stress from business, stress from many, many, many different things. Why not try to make everyone happy a little bit? The new water park that just opened at Ocean Park, that was my baby. I was the one that came up with the idea, and it took almost 5 years to build, but it's amazing. I mean, I was there for the opening, and I'm so proud of it.
It's good to see you. Continue to party on, Alan.
I'll continue to, expect to see you in Lan Kwai Fong.
Yes, definitely.
Okay.
Thank you so much for the conversation,
My pleasure,
Alan.
my pleasure.
That was Dr. Alan Zeman, founder and chairman of Lan Kwai Fong Group. Hi, I'm Isabel Wong with Yahoo Finance, and joining me now is Simon Leung, Group CEO and founder of WeLab. WeLab is Asia's leading fintech company, and the virtual bank's lending platform has near 50 million users in mainland China, Hong Kong, and Indonesia. In addition, WeLab has built digital financial services technology for over 700 banks worldwide. In today's conversation, we'll be hearing from Simon about how banks, insurers, and financial services companies reshape their business strategy and how businesses could stay relevant in the path forward. Simon, thank you very much for joining us.
Thank you, Isabel, and thank you, Yahoo, for the invitation.
And my first question for you is that as the founder and group CEO of Asia's leading fintech company, in your view, could you share with me what kind of mentality should we be having when we're starting business in this day and age?
I think there are a couple of important elements, right? Firstly, you have to embrace technology and innovation. There's a very important differentiation from traditional incumbents. If you look at how fintech company grew and win and grab market share, it is actually essentially this mentality where we can distribute financial services fully online, have a seamless customer experience, do not rely on human being. That's how you win. Over the years, we've looked at how can we win in this game, and it's not going to be with more people, it's not going to be with more money, it's not going to be with more branches, because there are banks who have more, and it's not going to be with more time. In fact, these banks have like 100 and 200 years of experience, right? Unless you have a time machine, you can't beat them. But it has to be with how can you, with data and technology, being able to grow faster than them. I think that's one essential piece. And as entrepreneur, I think a very important piece is persistence. How do you actually persist over challenges, rejections, and keep on trying new things before you run out of money, of course, in order to figure out the right solution?
Yeah, and in the past 2 years, we definitely saw a lot of changes in the market environment. And in this case, how can we equip ourselves for the opportunities in the post-pandemic era?
I think agility is extremely important. The world has moved to the new normal, where the old ways is not essentially going to be the same way going down the road, right? What we've seen is a couple of essential trends happening. I think obviously the first trend is everything is moving online a lot faster, from people ordering food, entertainment, and everything. And what we saw also, right, was the acceleration on online financial services adoption, meaning people actually, instead of going to branch to do a particular transaction, they all move to digital. And that people knew that this trend is happening, but people never expected this to happen so fast. And COVID really helped to give a boost to that, right? Let me give you an example. In Hong Kong, one of our largest market, we saw the loan application in Hong Kong as a whole market drop by probably 5 to 10% year on year before and after the pandemic. our business grew by 45% in the same period because we're already the largest online lending brand. When people need to go online, they came to us. So I think that is a very essential piece to make it work. Another element to this, going back, is the ability to accept rejection. I think it's I do not mean to sound negative, but I think it's a very important skill set to be an entrepreneur. I think we're talking to some colleagues about a story that I had, and it's not even the beginning of my 8 years of experience running WeLab. It's actually quite recent. It's where I got rejected. It was a Wednesday. It was so bad I can still remember it today. I got rejected within 5 minutes, over the phone, a WhatsApp, and email, over the course of 5 minutes. And I said to myself, oh my God, this is so difficult. Even after running this company for, like, I think that time was around 7-8 years, it's still so difficult. And then, so I said to my wife, I don't feel like having dinner. I'm just going to go back to my room and just drown myself in sorrow, right? But soon after a while, I discovered that it is actually the right path that I'm taking. Getting rejected is an essential path when you are aiming high. In fact, if you're not aiming high enough, you get yes all the way. That means you're not aiming high enough and you should change it. So we always remind ourselves that getting rejected, the feeling of being rejected, we have to get used to it because that's a natural result of someone trying to aim big.
Yeah, I can definitely tell that many entrepreneurs can resonate with that story because getting rejection means just you're one rejection away from your destination. And now I would like to talk a little bit about how fintech is changing the world that we live in. Because as Hong Kong's fintech development continues to pick up momentum, how will these technologies revolutionize the whole traditional financial service industry?
There are a couple of important areas of technology that we see picking up speed in terms of this. I think in particular, when we look at the area of digital banking globally, right, being able to do instant account opening is extremely important. And behind that, there's a lot of eKYC, AML, RegTech, that kind of technology that enable us to be able to do so. I think this is one kind of technology. AI, in terms of automation, decisioning, big data, extremely important. I think that's another area. The third area that we're investing a lot of effort and resources recently in the last couple of years is the area of privacy computing. Privacy computing basically is how do we protect our customers' data privacy in a world where essentially all large companies are using more and more big data. And if you think about it, the primary example is earlier, a couple of years ago, there's a social network that utilized data, collected data, analyzed it, sold it to someone else, and then someone won the election. It is actually a perfect example where your data is being used and processed and without you knowing it, and then at the end you get profiled and targeted, right? So we actually invest a lot into this kind of technology where we help people to protect their privacy. And it comes in different area, forms, and shape. One area is edge computing. How does data actually get processed in your handset rather than in a big data or in a cloud server? I can come into an area like federated learning, where actually your data in terms of model building across companies, right? Confidential data not being shared at all, but it's actually built in a separate system, infrastructure, right? So there are a lot of these, and we're applying quite a lot of patents on this area too. So I think there are quite a lot of essential technologies that is propelling the industry forward. And as we get, as the industry get bigger, we also have to be more responsible as well.
Right, and here's a follow-up question of what you just mentioned. As we saw how fintech is essentially changing everyone's life, what kind of direction do you think fintech will take in the near future?
I think it will take a couple of areas. Being able to access financial services instantly, I think that's a very key theme. That means no more waiting. Great for the consumers. People will focus a lot more on user experience. I can quote you a simple story. And you instantly understand, right? I mean, I was talking to a traditional bank CEO, and we were talking about serving customers. That bank pride themselves in having great customer services, right? And we're talking about it, and she was asking me, she said, how can you serve your customers well when you don't have people answering the phone and greeting them warmly? I told them we try to test and operate in a slightly different model. Our model is the best customer experience is when the customers do not have to call us. They can figure out everything by themselves because that mobile app or the mobile experience is so seamless, they get it right the first time. That is our version of great customer experience. So I think that is also something that is extremely important.
As you just mentioned now, well, of course, a lot of customers are trying to get a taste of the customer service of fintech companies, and that essentially boosted their consumption and usage of fintech services during the pandemic. So what are some of the products and areas you saw picking up momentum in the fintech space these days?
We saw a couple of things. I think what we're also seeing is the convergence of digital financial services in your daily life. One example is digital payment. It is part of your life. Buy now, pay later, instant loans, instant sales finance. These are examples of how fintech is integrating into your daily life. So you're getting the experience, or you're getting the fintech product without going to apply for it, because it has already been combined with a separate transaction that is just comes so naturally in what you do, right? So that is a part that we feel that it's happening a lot. So in the future, what we think about is, would you be able to interact with a bank without going to a bank? It's part of your daily life already. It's part of your daily transaction, and it's fully integrated into everything you want to do. The example is, what we look at it is, people don't say they want to get a mortgage. People say they want to buy a house. The mortgage is actually a byproduct of what you need. So you don't think about the mortgage anymore. You just think about what you need, which is buying a house.
And well, that really just sounds too good to be true with how the direction is going for fintech. Now, I would like to talk a little bit about the partnership that you recently closed, because this year you also closed a C1 funding round with Allianz. And in the core of this strategic investment, you will be jointly developing and distributing investment and insurance solutions with Allianz. So could you tell us a little bit more about this partnership? What can we expect from WeLab in the months to come?
The Allianz is a particularly important partnership. In addition to leading our most recent round of financing, we're doing something very strategic with them. And the thing what we're doing is we're co-developing a wealth tech solution. And what we're looking at is, how do we build a goal-based investment solution for individuals? If you think about it, right, for, let's say, a young millennial consumer, I think the biggest challenges, and interestingly, this is the biggest challenges of most millennial consumers across the world in different markets. We've done this study. It is consistently back in the same result: is they don't get good advice from banks. They don't know how to manage the money. They don't know how to save. They don't know how to grow, and they don't know what to invest, even if they want to save towards something. And interestingly, let's say, give the example of Hong Kong, right? An average 30-year-old consumer, their aspiration is to save $1 million Hong Kong dollars by the age of 30. Let's say a 25-year-old, they want to save $1 million by age of 30. But how do you get to that, right? It's actually a lot of advice you need to give. So what we're working at Allianz is actually technologies that allow people to set a goal and work towards it, and teach people how to get there.
Right, we just got to look forward to that. Thank you very much for joining us for this conversation, Simon. That was Simon Leung, founder and group CEO of WeLab. Hi, I'm Isabel Wong with Yahoo Finance, and joining me now is Christian Hogg, CEO of HUTCHMED. Christian has been leading HUTCHMED since its establishment in 2000. The cancer drug developer backed by billionaire Li Ka-shing was the first Chinese company to have an in-house innovative cancer drug unconditionally approved in China. It also submitted its first cancer drug to the US FDA earlier this year. In this discussion, we're going to hear from Christian about how he spearheaded the growth of HUTCHMED from a startup 20 years ago and the future of capital raising in biotech. Christian, thank you for joining us.
Thanks, Isabella. Pleasure to be here.
First of all, I would like to talk about COVID-19 impact, of course. So how has the pandemic impacted the global biotech industry so far? Have you seen more governments and institutional investors being more active in longer-term biotech investments so far?
Yeah, I don't think COVID, I mean, obviously COVID's affected everybody, right? Travel's been heavily curtailed around the world. Biotech is a global industry and a global business. So, you know, I would spend probably every week traveling pre-COVID. So that's changed. It's changed a lot. But the world has adapted as it has in many industries. And what we found is the industry's just carried on. Our business is primarily in China, so the Chinese economy continues to do very well. Our business is actually our prescription drug sales, and our commercial activities in China are doing tremendously well. So it hasn't affected our commercial operations. With regards to research and development and regulatory and getting drugs through clinical trials to approval, there have been periods where when there's been a really sort of epidemic or a center of the epidemic in a particular country where we're running clinical trials, it's slowed things down a bit, but really not too much. I'd say the industry's moved along almost unaffected.
Right, a follow-up question is that what's your view on the recent draft guidance for oncology drug development by China's NMPA's Center for Drug Evaluation?
I think it's very clever. Actually, the regulatory reforms that have happened over the last 5 years, driven by the NMPA, have done nothing but improve the call it landscape of innovation. The Chinese government in general is looking to move China to be an innovative biopharmaceutical industry and a source of global innovation. That's what the Chinese government's trying to do. They don't want to go down the path of creating a generics industry that is competing with India or competing with many other countries around the world. They want to be innovators, and so what we've seen is the NMPA has invested a lot of effort in supporting innovation and regulating to support innovation.
Right, and with that, where are we at in terms of cancer therapy? How soon can the world see cancer cure?
That's a good question. It's a good question. The last 20 years has been amazing in the field of oncology, in the field of cancer. It all goes back to the mapping of the human genome. Everybody got very excited about the mapping of the human genome back in the late 90s, early 2000 period. And everyone thought, okay, that's it. All disease is cured. No problem anymore. Obviously, understanding the biology of disease and understanding how the genetic profile of a patient is going to affect a disease is the first step. You have to understand that. Once you understand how a disease is manifesting itself or how a cancer cell is proliferating, you can start to say, okay, well, what if I modify this? What if I change that? And you can have a beneficial effect on that patient. The problem with that is the way that we modify, or at least the primary manner that we modify, it takes time to develop a drug. You can identify the cause of the problem, but then you've got to start the chemistry to figure out, okay, what am I going to design that can attack that problem? Then you've got to go through the phase 1, phase 2, phase 3 clinical trials to prove safety, then efficacy, and then prove safety and efficacy over a large patient population. So it's a long process. So all the excitement back there in the early 2000s was followed by 15 years of hard work by companies trying to figure out how to design therapies that could affect these genetic drivers of disease. Long story short, it's come a long way. And I'd say HUTCHMED as a pioneer in oncology has identified many areas, and we've invested a lot of time and money in designing drugs to hit those particular problem areas. What's different about us is that we design these drugs so that they're very clean, so that they just hit the targets that we're trying to hit, and so they don't cause a lot of side effects. And that's the trick. That's going to be the trick to curing cancer in the long term, in my view. And that is, using multiple therapies in combinations to attack multiple drivers of the same disease at the same time.
Right, and what do you think will have to be the focus for the global biotech industry or even the pharma industry in the years to come? And what could be the potential challenges you see?
Ultimately, it's about meeting unmet medical needs. It's identifying the big disease categories globally and trying to address them. And excuse me, you mentioned earlier, is there going to be a cure for cancer, right? That ultimately is the challenge. And you know, in oncology, cancer is really a unique disease, and it's a bit like the COVID. It mutates, it changes, and you think you've got one disease sorted out, and suddenly it turns into something different. Cancer is very much that way. So, you know, interestingly, you look at lung cancer as an example. If you go back to the 1990s, really there were only one or two types of lung cancer that were identified, well, certainly less than 5 types of lung cancer that were identified and were being treated. Today, coming forward, the improvement of the understanding of the biology of cancer has gone so far. Now there are probably 30 or 40 different types of lung cancer that people can understand and identify and understand the genetic drivers of those diseases. But ultimately it's about focusing on the major unmet medical needs that the world has and investing to try to solve them.
Now, 20 years ago, HUTCHMED was a startup, one of the few biotech startups that was in the innovation space. And back then, investors were probably more risk averse and had a shorter investment horizons. So how did you convince investors about the prospects for HUTCHMED back then?
Well, I didn't convince investors. I convinced one investor, and that was Hutchison. That was C.K. Hutchison. And particularly the senior management of C.K. Hutchison, so Canning Fok and Li Ka-shing, obviously, and the management of Hutch. They were interested in that at that time in getting into the traditional Chinese medicine area. They were interested in botanical drugs, which at that time was an area of quite high interest among many of the conglomerates in this part of the world, in Hong Kong. So at that time, the idea was, let's go in and understand traditional Chinese medicine, botanical drugs, and see what is in Chinese medicine that is creating this benefit to patients. And that's how we started the first 5 years. So from 2000 to 2005, we were very focused on botanical drugs and Chinese medicine. But in order to fully understand Chinese medicine, we built up a scientific team of highly trained Chinese scientists that we brought back from US big pharma and big biotech back to China to start looking at traditional Chinese medicine. And as we did that, we realized actually there's a big opportunity in oncology in China, and not just in China, but for the global market.
Now, of course, when a drug is developed, it has to be distributed. The global reach and distribution are key for drug developers. So do you see geopolitics playing a part in terms of how soon new drugs and innovations will reach key markets going forward?
I don't see geopolitics having a major impact. You know, at the end of the day, we're creating cancer drugs that are helping patients that have no treatment. Where that cancer drug comes from really is of no consequence. I don't see the Chinese regulatory authorities caring that a drug is discovered in America or in, you know, whatever country, and not wanting it to come into China because it's not invented in China. You know, that's just not happening. The Chinese regulatory authorities are looking at patients' needs in China, looking at diseases in China, and if a drug that can treat a particular type of disease is produced and innovated in America, the Chinese regulatory authorities are very open-minded to bringing it in as quickly as possible for that patient population. Likewise, the other way. So, you know, innovations from China are now making it quite rapidly to the US markets, to the European markets, because they help patients there. Governments ultimately are trying to help their population, and particularly in difficult diseases like cancer, you know, you can't be, you have to be open-minded as to where that therapy comes from. So long as it's been developed in a manner that meets the guidelines and the requirements for safety and quality and efficacy that exist in those other markets.
And finally, 20 years on, we live in a very different world, and you've been leading HUTCHMED for 20 years. So what would be your advice for young entrepreneurs who are trying to pioneer in their own sectors?
It's a good question. probably several things I would advise. Number one, for a young entrepreneur, is get into an industry or a business that you're passionate about, because there will be good times and there will be bad times, and you need to be doing something that you enjoy and that you believe in. And that, I look at our activities in oncology over the last 15, 16 years. There have been some very difficult times, but during those times, you're able to sort of keep going because you're on a foundation of satisfaction, that you are trying to address a problem, and if you don't do it, maybe nobody's going to be doing it. So you got to be doing something you're passionate about, that can sort of keep you focused and drive you through difficult times. Related to that is never give up. There have been the global financial crisis. We were in deep trouble, as were many companies around the world, in terms of availability of cash resources. We were developing a number of drugs, and the ability to access the equity capital markets was very limited during those times. But we never gave up. We found ways to fund our business, and we just kept going. So that's the second thing, is never give up. The third thing I would say is always look for a tailwind. Never play in an industry or a business that you're facing headwinds, because ultimately it'll get you. If you've got tailwinds behind you, you'll succeed. So you have to have some vision. We saw, and actually Hutchison saw way back 20 years ago, the opportunity in the pharmaceutical field. They initially thought it was Chinese medicine that would be the answer, but it kind of evolved into oncology because we were in the business and we could see where the opportunities were coming. We saw that oncology was going to be a big deal, both in China and outside of China. So we moved our strategy to get the tailwind, to get into a sector where we knew it was going in the right direction. I personally believe that in the pharma space and the biotech space, it's just actually the beginning. So this tailwind is going to continue. So those would be my words of advice for any young aspiring entrepreneur, is focus on those three things and you'll probably be okay.
Yeah. Thank you so much, Christian, for your insights. That was Christian Hogg, CEO of HUTCHMED. I'm Isabel Wong with Yahoo Finance, and joining me now is Bernard Chan, convener of Hong Kong's Executive Council. As one of the top advisors to Hong Kong Chief Executive Carrie Lam, Bernard is one of the most influential politicians in Hong Kong, who serves as a Hong Kong deputy of China's National People's Congress. He's also the president of Asia Financial Holdings and the chairman of its main subsidiary, Asia Insurance. He was also the chairman of the Council for Sustainable Development in HKSAR government. In this discussion, we are going to hear from Bernard about the future of Hong Kong, as well as what the post-COVID global economy is going to look like. Bernard, thank you for being here with us.
Thank you, Isabel.
Now, first of all, I would like to do a deep dive into the future of Hong Kong and its status as the international financial center. Because earlier this month, you mentioned a local version of the Chinese anti-sanctions law is likely going to be enacted in Hong Kong. But the international business community has been raising concerns regarding how the national security law, as well as the strict COVID travel restrictions, might be compromising the appeal of Hong Kong as an IFC. So what's your view on this, and how will Hong Kong stay competitive?
Right. Well, first of all, thank you for asking that question and allow me to clarify what I said earlier. I think it was completely being played up by the media. I think they quoted me saying the anti-sanction law is coming. Now, actually, that's just not what I actually said. I was being asked whether, why is it being stalled? Why isn't the law that being passed in China not being passed in Hong Kong? What I referenced to was, yes, the law's been passed, and eventually it will probably pass in Hong Kong. But I think exactly to your point, I think central government is well aware the concern from the business community in Hong Kong, especially the financial sector, from the financial sectors. And so I know there has been a lot of dialogue between the Hong Kong administration with the financial sector, and also with I'm sure the Hong Kong government is in dialogue also with central government. So I think there's still a lot of rooms, I think, ongoing dialogue. So there is no time frame, as far as I know, when this local legislation will take place.
As you just put it just now, Hong Kong is essentially sort of stuck in a limbo because, of course, international travel, like you mentioned, it's not resuming anytime soon, and it's waiting for a chance to reopen the border with mainland China. But Hong Kong, as one of the most internationalized cities in China, it is rather challenging to reach that zero COVID target. So is it certain that Hong Kong will not reopen internationally until the border with mainland is reopened, despite the economic consequences potentially?
Indeed, it is super challenging because we have two sets of audience. Now, obviously, we have one that are very exposed to international, so they do international traveling for businesses or even family reunion, or children study abroad. So that group of constituency obviously would prefer a lesser restrictions. Whereas we have another group of constituents, both are local as well as those who are local, but they want access to the mainland market. So for that group, we would definitely need to try to contain the virus as much as we can, whether it's zero or even close to zero. Is the priority right now. Now, is there any chance that we can relax those restrictions with the international travelers? Yes. Well, first, I think the immediate, I guess, objective is to make sure that we can get as many people in Hong Kong vaccinated. At the same time, there's also an external factor, right? So we impose this strict quarantine from 7 days, 14, 21 days based on the risk of these returnees from the countries they come back from. Now that with things are actually, I noticed that many countries are actually seeing the infection rate coming down. So we may able to lower those requirements for them. So US and UK are currently in 21 days category. Maybe they'll bring down to 14 days. So I think there's hope. There's hope that because at the end of the day, you cannot be stuck forever like this, right? Eventually, the world needs to come back together. So I think, but the question is how and how soon and so on.
Pivoting a little away from COVID restrictions, because recently we just heard from Chief Executive Carrie Lam, her last policy address in her 5-year term. So could you give us some insights in terms of what are the priorities the next leader of the city will have to focus on?
Well, obviously, social housing is definitely a topic. I mean, there's still something like a minimum 5 to 6 years waiting queue for public housing. That's all largely to do with a period of time where we completely store any construction of the housing unit for a good reason back then. I think there was the economy is depressed. So at the time we decided, then the administration decided to basically stop selling land, and so now basically we're doing catch up. So we do have now identified sites that are already ready to build something between, I think something like about 300,000 public housing units in the next 10 years, as well as something like 100,000 private housing units in the next 10 years. So it is in the pipeline, but it's not going to happen like in the next 2-3 years. It's still going to take 10 years time to catch up with the shortfall. But that's one aspect. But of course, more importantly, apart from the housing issue, is the future of Hong Kong. Now, obviously, Hong Kong is an IFC, but can Hong Kong just be an IFC? But because an IFC cannot function alone, you need other industries, right? So I think under the 14 5-year plan, basically central governments also endorse Hong Kong's role going forward. In addition to IFC, we also the aviation, international aviation hub, international trade hub, and very excitingly is the innovation and technology hub. Now that is new for Hong Kong. I mean Hong Kong has bits of that, but now even central government endorsed that role for Hong Kong, especially because our proximity with Shenzhen. You can imagine when Shenzhen have a very strong INT hub, but together with Hong Kong, which we are probably very good in the research end of it, plus financing and elsewhere. I think the idea mentioned by the chief executive in her policy address is how do we take advantage of this potential synergy with our next door neighbor, Shenzhen.
And with that, would you consider the top job?
No, this is definitely a job that requires a lot more than any normal person can do, because obviously, you have to be trusted by the central authority. You are answerable to Hong Kong people, but you also have to understand all the dynamics these days, as you put it earlier, the geopolitics. Because Hong Kong is definitely the international, the most international part of China, but we also have a domestic audience. So it's not an easy job that anyone can just decide to sign up for.
Now, since you mentioned Hong Kong having the prospects of being an international innovation hub, as well as the prospects of Shenzhen leading that as well. So I would like to talk about what this means for entrepreneurs around the world, because of course you're a member of the board of directors of Alibaba Entrepreneurs Fund. Mm-hmm. But recently we see that Beijing has been ramping up its efforts in terms of cracking down on the tech sector. So how should entrepreneurs around the world interpret this situation and make sense of the market environment?
Well, I think technology is still the way to go. I mean, I don't think there's any chance of turning back. I think what happened perhaps in the mainland is more about making sure there's no one player being too dominant. I think that's what it is. Clearly, I think the writing is in the wall when we see certain tech companies, not just in China, elsewhere in the world too, right? And when you have one company so dominant and start to have some impact to the social fabric, I think that's where I think maybe the authorities decide to step in and put in some regulations. But then technology is still the way forward. I mean, I don't, especially after COVID, people are so used to now Zoom into meetings and so on. So I think the application of technology will still be this, front and center going forward in every industries.
Yeah, and with that, what kind of characteristics will entrepreneurs need to have in order to appeal to investors in a post-COVID world?
Ooh, well, that's a tough one, because I wish I know the answer too. Well, I suppose that it's actually accelerate a lot. I mean, before, it's all, technology application is all about scalability, right? Can you scale it up? Prior to COVID, I think the tick up is good, but now with after COVID, I can imagine that people are so accustomed to, people are so used to, so everything can scale up so easily. So I actually feel that I think that this is the right time for entrepreneurs to take advantage of the fact that you can easily, if your business model work, I think it can scale up so much faster and can synergize with other different applications as well. So I think the way forward now is not just about your platform, but it's how your platform can work with others, collaborating with others together. Because it's everyone's so accustomed now. There's no chance of we turning back. I can imagine now. I used to have physical meeting, and now that we have all done Zoom meetings, I cannot imagine. I still going to have some physical meeting, but I think Zoom or other application type of software will stay, even when travel resume and lives go back to normal. I think that will not be obsolete at all.
Now, another area that has picked up momentum in the past few years is definitely ESG. While it's been around for quite a while, in the recent years, it's in a lot of discussions that we see world leaders picking up momentum for their commitments for net zero emissions. So, have you observed any changes in terms of investor appetite and investing into the betterment of the future?
Oh, huge changes. Early on, you introduced me as the former chairman of the Council for Sustainable Development. I think this is at least 7-8 years ago. And we did a study on carbon emissions and so on, and we gave the report recommendation to the government. But honestly speaking, the traction is so little. Because the whole society didn't think much about carbon emission at the time. It's only 7, 8, 10 years ago, right? But today, oh my goodness, everyone's talking about it. Largely because it's also top down, because China has made a commitment. I think it's 2060, right? Carbon neutrality. Even Hong Kong government has made a commitment to try to get carbon neutrality by 2050. And in Hong Kong in particular, we're going to stop selling fuel combustion car by 2035. that's not very far away from now. So with that kind of commitment, you can imagine it's going to create a lot of new opportunities. I understand there's already a lot of money, both private money as well as state money, are now put into the investment circle. They all try to look for a solution, investing in potential solution to achieve those targets. So I think with that kind of a top-down approach and with the commitment made, I think it's going to be very exciting for this whole sector, because it's going to be an ecosystem being built. As I said, if I look back 7 years ago, little pockets here and there. But now, for the first time, I actually think this is actually a viable business model.
And now, finally, this is $1 trillion question. On ESG reporting, how do you think policymakers and the global investment management industry should approach ESG reporting across different sectors?
That question was asked about a few months ago to me, and I thought, because of my previous role as the chairman of sustainable development, I thought, it's great, all the talk, ESG and so on, right? But until it's become part of the KPI for the CEO, otherwise it's just nice to have. So when I said that, when I responded to the question and how I just responded to you, a few bankers, CEO, global bankers and local bankers immediately jumped in and corrected me. He said, no, it's already now in my KPI. Well, that is going to make a difference. Because when it's part of your KPI, then it's not just a talk show. People will have to take serious measurements. It's no longer just a number now, right? Because people are looking at impact, not just a nice to have report. So I actually, for the first time, think that things will start to change.
Right. Thank you very much for the conversation, Bernard.
Thank you.
That was Bernard Chan, convener of Hong Kong's Executive Council. Hi, I'm Isabel Wong with Yahoo Finance, and joining us now is Michael Chan, co-founder and co-CEO of Bowtie. Michael is an actuary turned entrepreneur who co-founded Hong Kong's first virtual insurance company, Bowtie, back in 2018. Bowtie uses technology to simplify insurance experience and make different insurance products available online at a lower price. This year, the virtual insurer even opens a coffee shop as a physical venue for customers to talk to staff. In this conversation, we're going to find out from Michael about his vision for the future and where insurtech will go in the road ahead. Great to have you here, Michael.
Thank you for having me, Isabel.
Now, first of all, I would like to talk about the challenges and opportunities for startups and entrepreneurs. Of course, one of the biggest challenges we've seen, the world has seen, was the global pandemic. But also the pandemic has given us new perspectives in terms of how we used to think things would work and how they just completely stopped working in the face of a global pandemic. So as an entrepreneur, what was the most important lesson you learned during the pandemic?
It's a very good question, Isabel. I think one thing we always quote ourselves internally is that startups have a 90% chance of failing. So one of the biggest things we learned was really how to deal with even more uncertainty. So as a startup, you don't know where the market is, you don't necessarily know what your product is, you don't know how people will respond, you don't know how the incumbents will respond, and on top of all of that uncertainty, you now have how society changing, where will the future change? Healthcare is making big changes, public policy is making big changes. So all of that created a lot more uncertainty for, I think, all these startups out there. And we were definitely impacted as one of them. As a health company, as an insurance company, we have a social responsibility around delivering health insurance, around covering medical bills. So we were sort of on the front lines of, okay, how is this going to play out? How do we position ourselves? So a lot of decision under extreme uncertainty, I'd say.
Right. And well, a follow-up question is that, of course, during the pandemic, the first industry that would have to respond relatively quickly is the insurance industry. Yes. So how did Bowtie respond to the pandemic at the start of it all?
Yeah, I still remember when it first started, no one had any idea what we were dealing with, right? Is this airborne transmission? Are we going to have to quarantine everyone? What's going to happen? Is everything going to stop? For ourselves, we took a sort of two-step approach. One is make sure that our operations can keep running. So the very first thing we looked at, what if everyone tomorrow had to work from home? How does our claims work? How do our payment systems work? Do we have everything in place so that even if everyone were to be quarantined tomorrow, the company can still run. So we first have to make sure that the company is fine, we can still operate. The second one is actually look at, what are we responsible for? So what is our responsibility as an insurer? So looking back, if there's a new pandemic, no one knows what it is. We know it's a virus. We don't know how much it's going to cost to treat it. We don't necessarily, no one had any idea, is it covered under insurance contracts, under all the different insurance products? How is it covered? A lot of fact finding, a lot of making decisions. Okay, we're going to cover this. We are going to cover this. Bowtie covers COVID-19 treatments. If you're quarantined, we pay you additional money to cover your lost income, your lost expenses, etc. So a lot of those, what is our core responsibility and what should we be doing, even in the face of something completely new?
Well, of course, during the pandemic, we have also seen the surge in demand in terms of virtual products and services, namely virtual banking, insurance, or telehealth. So what do you think will be some of the products and areas that will still continue to gain traction even after the pandemic?
Yeah, I think one immediate thing we saw was a lot more interest in health content online. Just the health awareness, the search for health information just exploded. So for our own website, for example, Bowtie does actually put out quite a lot of health content as a health insurer. We use that as a traffic funnel. We use that to be helpful. Pre-pandemic, our website used to get about 200,000 traffic visitors a month. During the height of the pandemic, we were getting over 2 million, so a 10 times increase. And this is with a Hong Kong population of about 7 million people. The other one that I think is much more interesting, and it's actually something that Bowtie has done also, is people are much more aware of the preventative health side. So it's tied to the increase in health awareness. So now that everyone's so health aware, we've seen that actually treatment doesn't make sense. So you're not going to build enough hospitals. You're not going to have enough hospital beds for everyone if you just let this run. How can everyone keep better health? How can everyone keep better conditioning? So that's actually one of the drivers for Bowtie to actually open up our own health clinic. Even if you're not ill, are there things we can change about your behavior? Are there things we can better monitor you around? And there's a lot of interesting health technology that's emerging that we're putting into the clinic. So I think that awareness, I think it's just a general increase in health awareness is driving a lot more demand for data as well as just preventative health. How can I keep myself healthier?
And now that you speak of data, so how do you envision consumer behavior will continue to evolve? What are some of the questions that you get the most from your customers?
Fundamentally, I think the big issue is there's a lot of friction between how data flows. So as an insurer, we digitize a lot of our processes. Our underwriting is digitized, our claims are digitized. But at a certain point, the moment we touch the health system, a lot of things still go back to a much slower offline. We literally still send faxes, unfortunately, to request information from some healthcare providers because that's the only protocol, that's the only available channel to accept requests. So until we can digitize, a general rise in other industries, there will be a lot of our pieces that consumers expect us to be digitized, but unfortunately we need to move the entire society and other industries up before we can move there.
Now, moving on to your vision. So, of course, in the past few years, or even in the digital age, we saw how soon technologies such as AI, blockchain, and Internet of Things change the way many industries operate, or even the creation of new sectors. So, as an entrepreneur who operates in the digital economy, how do you, what's your vision for the future, basically?
I think the fundamental biggest change I want to see is actually, there's a very old adage in the insurance industry, which is that insurance is sold and not bought. So insurance is historically understandable. You don't want to talk about death, you don't want to talk about illnesses. So you require someone to come sell you effectively. And because it's such a pushy sales process, that downstream creates a lot of problems that the industry, that regulators have to deal with. We think a lot of that root problem comes from that initial pushing sales process. And I think a lot of what we're trying to do on the digital side is actually how do you reverse that? How do you get consumers to be known or to be responsible for, okay, I know I should get health insurance. People have that awareness, so okay, I'm traveling, I should get travel insurance. But we don't necessarily have that yet for life and health insurance. So when we can get that behavioral change through technology, through making the products much more simpler, through information being much more transparently available, once we make it that easy, I believe we can start changing that equation, which is we don't have to be pushing insurance onto people. And people can accept it as part of, a lot of their other finances. Payments, for example, is very, very digitized nowadays. People want that. They see the convenience. They see the benefit of that. I think insurance is still in a very early stage of that. So in Hong Kong, less than 1% of insurance is distributed online, but it's growing extremely fast. So last year, Bowtie grew 10 times. We have quite a few peers also working on the digital insurance side. They've all grown very fast. So we're starting to see that pick up, but I think the vision is still, how do we change that sold not bought mentality?
So this year, you don't just operate in the digital space because you decided to open a coffee shop. And could you please walk us through the thinking behind that decision and how successful has it been for you guys?
Yeah, it's been a very fun process, first of all. There's two reasons why we did the coffee shop. The first is we were talking about insurance is sold not bought. I want to be able to change that. So we don't have pushy sales, but we do want to be helpful. We do want to be there for customers when you need us. And so the coffee shop is largely a symbolic meaning. It's a physical location where customers can always trust that you go there, you'll be able to find Bowtie. Someone will help you. So it's really that being helpful mentality being put into a very physical manifestation. The second reason we did the coffee shop was actually our lease came up in the middle of the pandemic. And there was a lot of questions around what's going to happen afterwards. Are we going to work from home? Are we going to go distributed remote? Are we going to all come back to the office? How are we going to change? How's the mode of working going to change after the pandemic? Again, it was one of those things we don't know how it's going to play out yet. I think a lot of companies are still trying to figure out the right balance. We decided we'd go remote first. So it'd be optional to come to the office, and we've kept that policy since. But we do want people to come into the office and have a room to collaborate, to discuss, to socialize, and that's really where a lot of creativity comes from.
And as you mentioned earlier, there are more insurance players entering the space. It's getting more crowded. So in that sense, what direction do you think InsurTech will take in the road ahead, or what kind of customer pain points will the industry address other than just speed and access?
Yeah, I think speed and access is still going to be the focus for a lot of people for a long time. The insurance purchase process is still extremely long. It's still extremely unfriendly and not very convenient, frankly. So there's still a lot of work to be done. I don't want to downplay that. I think moving ahead, there's going to be a lot more financial education that we have to do. I think we'll be successful when the general financial literacy level is raised. So it depends on us to actually raise the level of, for example, in Hong Kong, a lot of people don't know how much life insurance they need. If you were to ask, any person on the street, I like to ask some of our customers, how did you decide to buy, this much life insurance? And actually the answer is surprisingly often. They read some of our blog articles, they read some of our calculators, and we actually gave them that information so that they had the confidence to know how much life insurance they should buy. And that number is generally not well known. Recently, the Insurance Authority released their own calculator to help people come to terms with that number. Another question I like to ask, I heard from another CEO, is he likes to ask his staff, if you were to delay retirement by 5 years, how would that impact your retirement spending? How much more money would you have? How much more money could you spend every month after retirement? Or what if you were to retire 5 years earlier? How would that change? And practically no one, even in the insurance industry, can answer that question. So there's a lot of basic financial literacy things that, I think it's really the industry's responsibility, the regulators' responsibility to help promote.
Right, and in terms of the future market landscape, I would like to ask, what do you think that's going to look like, the market dynamics? Do you see more consolidation, or do you see the coexistence between virtual and traditional players?
I think it will be, my own guess, it's anyone's guess, will be a lot of coexistence. There will be certain segments that will want a pressureless sales environment. I can just go online, look at what I need to know, and then just easily buy what I need to buy, and then have the trust that the customer service will be there when they need it. There'll be a portion of customers that are less comfortable with the whole process. They just don't want to deal with financials. They need some nudging. And those people will probably go back to the traditional advisor channels. So I think we'll see both. I think it's quite similar to how e-commerce and physical commerce, both will still happen. There will be certain segments and certain use cases for the different channels.
And finally, what's next for Bowtie? Any new products, international expansion? Where do you see opportunities?
Yeah, international expansion is definitely in the cards. We're talking to many parties there. We're going a lot more into health, actually. So as I mentioned earlier, we opened up our own clinic. We have a partner with Gleneagles Hospital in Hong Kong. It was one of the first products to actually be co-branded between an insurance company and a hospital to fully cover sort of package plans, etc. But the key there is, I think actually a mentor was mentioning, insurers used to be very early adopters of insurance. So when computers first came out, insurers were the first adopters. They paid a lot. They helped invest a lot into computers to help commercialize them because we're such greedy users of technology. And I think that's slowly changed. We've slowly become a much more, almost a dinosaur industry. We're very slow to adopt technology. And so we're bringing in a lot of new technology. We're injecting a lot of new technology. And what I'm looking at next is there's some really exciting things happening on the health side, on the biotech side. The pace of development, the money pouring into that has been amazing. And insurers are still very, very slow to adopt a lot of the innovations happening there. So I want Bowtie to be one of those that can actually be early adopters, that can help fund and invest into a lot of health innovations and actually find use cases for them and actually help bring them to commercialization. So we'll be investing a lot more into the healthcare space in the future.
Well, thank you for the conversation, Michael. That was Michael Chan, co-founder and co-CEO of Bowtie.
Hello and welcome to the Trending Industries panel at the All Market Summit 2021. I'm your host, Richard Lai, and today we'll be talking a little bit about the logistics business and the online commerce business and see how they're doing during this pandemic. Today, I'm joined by Mr. Vincent Fan, who is a co-founder and chief strategy officer of a Hong Kong-based smart logistics company, Zeek. Thank you, Vincent.
Thank you.
And then all the way from Singapore, we have Mr. Magnus Ekbom, who's also a co-founder and chief strategy officer of the e-commerce giant Lazada. Hello, Magnus.
Hey, good to see you.
Yes, this is actually pretty fun, isn't it? We're here together in this virtual stage, but yeah, it's just better than a Zoom call, right? So anyway, given that our theme is about the path forward, let's talk about what kind of changes that COVID-19 has brought to both your companies. Like, I'm sure there are both positive and negative changes, but I'd like to hear straight from the horse's mouth. Maybe we can start with Vincent. You want to talk about it?
Well, actually, the COVID is actually speeding up the e-commerce development of both merchants and also end customer. Right. In terms of merchants, they are getting now more agile, more flexible in terms of they're changing their business model, changing their operating model to keep up with the needs of the customer. So in terms of their needs for technology support, logistics support, we see there's a huge demand that coming from different markets that we are operating now. And in terms of a consumer, although e-commerce have been actually growing quite fast in the past few years, but COVID has actually speeded up even further. Things are coming more quickly. In the past, people may be expecting things to deliver within a few days. That is good enough. But nowadays, things are happening within hours or even within 1 hour time of delivery. So in terms of our provision of delivery service, we are now getting more robust in terms of the resource and in terms of the service level that we are providing to our customers.
Wow, it's a different kind of demand in terms of expectations. I guess, Magnus, you see a similar kind of trend on your side, maybe?
Yeah, sure. I think all good points made right there. What I would probably add is that when we look at the sheer amount of change that has taken place and is still taking place, I think we are yet to fully understand and comprehend all of it. I think it will take a few years before all of it really lands, just how much transformation has actually taken place. I mean, we use the word acceleration very frequently. I think that's a good way to describe what is going on. And I think the change on the consumer side, I think all of us, we feel it, we see it, we are part of it ourselves as end users. But I think the key point is probably, as you say, right, just how businesses are run. And what we see more and more is that the quality of digitalization is really being enhanced and taking leaps forward. It's not just about being online, but it's also about really being good in executing on that strategy. And I think that is something we see in a very different way today, just comparing to 12 or 18 months ago. And that is a trend that is only getting started.
Now, according to the Zinc Southeast Asia report, the region saw an 85% year-on-year growth in online retail penetration. So, Magnus, how does that compare to Lazada's local performance over there?
No, I think that the shift from online over the past year, I think there is no question about that. We have seen a big leap in that for sort of natural and obvious reasons. But what I think is the more interesting theme here is what is happening with the way, not just the channel shift per se, but really how we think about using technology to grow our businesses. What we say is that when you look at more mature markets, be it US, China, Europe, and so forth, there's really the channel shift that's the main theme. In Southeast Asia, digitalization and the digital economy as a whole is really pushing, in our case, the retail market forward in a ways that a channel shift would not be able to achieve on its own. So I think digitalization is really a net positive. And I think that the SMEs of Southeast Asia are at the forefront of digitalization, I would say probably in the world, in terms of how much and how quickly they have been able to adopt and really leverage technology to take their businesses to a new level in terms of customer offering and just capturing the opportunities that technology offer.
Were there any particular regions that grew the fastest during this time in Southeast Asia for your business?
I think when you look at sort of the sheer magnitude of growth, you do see a strong correlation between the severity of lockdown and movement restrictions on the one hand and the direct impact it has had short-term on commerce. But I think the more interesting question is, what does the next 5-10 years hold for us? And I think that when you look at, for example, Philippines, Indonesia, where you have a large part of the population still in rural areas, I think there you're really seeing a quite phenomenal uptake comparing to some of the other areas of the country. In more developed markets, with Thailand, Malaysia, and so forth, I think you're seeing more of again, acceleration of the ongoing trends. So I think we have interesting developments both in the metro as well as in the more rural areas of the geographies.
Excellent. Now, bringing it back closer to hometown, Vincent, I know Zeke is also active in this area and maybe potentially expanding into Southeast Asia soon as well. I'd like to see, can you tell us a bit about how you grew from a Hong Kong-based business and bringing that model, or maybe even adapting your business model to the larger region over here in Southeast Asia?
Sure. We actually started our business in 2017 from Hong Kong because 3 of the co-founders are all from Hong Kong. We tackle it from a smart logistics perspective where we blend in technology in traditional logistics, and then we can provide a more flexible business and more data-driven delivery service to our client. And then actually we have tapped into the Southeast Asia market back in 2019, 2 years after we started our firm. And our first stop was actually Singapore. Because we see that Singapore is actually, in terms of culture, in terms of purchasing behavior, very similar to Hong Kong. And also a metropolitan that we see our model, our system can be easily replicated to a city like that. And then years after, we actually nowadays we are in Malaysia, we are in Thailand, and also we are in Vietnam. And actually going back to your earlier conversation about the growth, we do see that there are similarities between Hong Kong and Singapore because they are like one of the high population city. And then the pickup of the e-commerce, or also we are talking about quick commerce nowadays, are mostly on F&B, food and beverage, and maybe grocery. However, in markets like Thailand and Vietnam that we are now operating, we do see quite a lot of innovative usage of the last mile smart logistics of our service. For example, there are more what we call live streaming, KOL selling, especially in Vietnam, where they have fresh fruits, right? KOL do their fresh selling, and then things are being delivered within 2 hours. The durian and such, right? So,
it's like an auction as well.
Exactly. These are very, very interesting and innovative usage of our service, and we do see that these 2 markets in particular has a lot of potential to grow in the future.
Magnus, do you see the same kind of trend in your other Southeast Asian markets, and how do you guys tackle or satisfy the consumer needs over there? Do you also have these KOL videos? Maybe you yourself?
I was going to say, you asked a big question. No, I think that there are many interesting trends to be seen. And what we usually say is that every market here in Southeast Asia, I think in particular, is its own story, and it's a story worth telling. I think when you compare sort of the bonsai tree of Singapore with sort of the phenomenally large market like Indonesia or Philippines and Vietnam for that matter, I think there are different trends and user behaviors to capture. When we talk about service level and service offerings, we do believe that quick commerce and fast delivery, I mean, the quick commerce is this new term that is being used. I think there is definitely a use case for that. But I think it's also important to differentiate what is a mainstream core service versus what is a more specific use case for a specific vertical category. When you talk about grocery and sort of fast and rapid delivery, definitely, I think there's relevance in the time to consumer. Whereas for other more general merchandise products, there is no added relevance versus to the cost for the consumer in many cases. So I think we need to look at this with a more vertical lens when we talk about what is the right strategy. And building a consumer offering on a smaller scale is one thing. The question is, what model can you actually scale? What model can you build sound and strong economics that really adds value across the whole supply chain? And I think that is something where innovation and cost realities is also sort of finding its own balance in the ecosystem. Innovation is great. I think that vertical delivery strategies for relevant categories is the future. But I think we should be a little bit careful in sort of generalizing everything into sort of mass market adoption. I think that's where the differentiation is really the key word that I think we should put extra emphasis on.
So what you're saying that there's no one model that applies to all markets, right? But
I think you have the market perspective on the one hand, which I think is very important. On the other hand, you have the vertical itself. When you look at, as I said, grocery versus fashion, general merchandise, it's two very distinctively different use cases that require different strategies. And in addition to that, when you see KOL influencers and so on, I think that is one out of many use cases. And when we look at content and interactive user engagement, it's coming closer and closer to commerce. 5 years ago, we had sort of social media, we had payments, we had e-com, we had maybe ride-hailing and whatever else, right? All of these verticals are sort of approaching each other, where advertising, user engagement, logistics, e-com, it's really about who has the killer cocktail, who has the best package strategy to really execute on that. I think that's the big question for the 5 years to come.
Okay, excellent answer. Now, Vincent, I want to go dig a little deeper into your area, which is smart logistics. How do you define smart logistics? And can you give me an example of how you've helped a client transform from, I don't know, would you call it conventional logistics to smart logistics, and how does that benefit the business?
I think smart logistics, I think we're defining this as a way of using technology and data to make logistics more valuable to our client. I can approach this question in different aspects, right? First of all, the use of data actually help us to do the routing better, do the pairing of order better, so better utilize our resource. In that case, how we benefit our customer will be a lower cost or a faster service, right? So this is in one area. Another area is that with the use of data, we can better establish a user experience for our client. For example, we have a whole bunch of different types of resource in the market, right? Walker, biker, van drivers, and truck drivers, and all different kinds of resource. So when we help our customer to deliver their goods, so it depends on how far the goods are, how heavy they are, whether it can be catered for a walker or it can be catered for a van driver. So all these is actually it needs a lot of matching behind to see what goods to be delivered and the resource that we are going to use. And at the same time, if you have ever used an app, for ordering food or ordering any kind of product, especially for a very short delivery time, you will actually look at the app very often, right? See where is the goods, how long it's going to be, is there a courier nearby? So all these data actually is provided by us, with a very completed API to our customers, so that the real-time data, real-time estimated time, location of courier, whatnot, all are feeding back to our merchant, and then they can show it to their customer. So this is how we enable a better experience for our merchants. So to especially for those who are not running their own fleet, right, who rely on 3PL. Traditional 3PL might not be able to provide these kind of real-time, big data, estimated time of delivery. Those kind of information and data is rather sophisticated for traditional logistics to attend, right? So we focus a lot on that, enabling them to do a better experience for their customers.
Now, Magnus, you also have your, I believe Lazada has its own logistics arm as well, and you may have other partners across Southeast Asia. One question I've always had in mind is it always, having a fleet of vehicles, is that always the most efficient way? Or, because I think, Vincent, you mentioned that you can, sometimes it's, you have bikers, sometimes you have walkers. I guess, where do you see, which one works best in different markets? I would imagine there are some really rural areas where, okay, you definitely need a car for sure, but maybe some markets, I guess Hong Kong would be one of them, maybe walkers are more efficient in some ways. I'm just wondering if, Magnus, you have any examples on top of your mind.
It's all about drones.
Drones? Okay.
No, I'm kidding here. What I was going to say is this, that when we look at the logistics value chain from merchant, from warehouse to the end customer, I think we always put a lot of emphasis on what we see as end users, which is the delivery man that comes up to the doorstep or drops it at a drop-off point or whatever it might be. The key question here is that this is a very long value chain. And when you look at the relevant vehicles in terms of pickup, in terms of line haul, or like sort of the middle mile between one facility to a hub closer to the customer, that is of course larger vehicles and so on. And I think this is a continuous optimization that is going on in the background, and that's also where many companies, and I'm sure Vincent would agree, that the real sort of magic is not always the last part that we see as end users. It's really what happens before that determines how efficient, both in terms of cost and time to delivery, the full chain is as such. In terms of when you look at a city center, when you look at a rural area, this is still dominated in Southeast Asia by bikes or trikes. That has been the case for should we say, the last decade or so, and everything that we have seen as the e-commerce sector and overall instant delivery has continued to grow. And I think that will probably remain the core service, or should we say means of service for the years to come. There is definitely interesting questions to look at when we talk about electrification. We talk about new types of vehicles. We are looking at what we can do in terms of moving from combustion to alternative options. I will not just say electrification per se. I think there are different options that can be means to power last mile delivery from a technology standpoint. And I think there are so many things to happen in that space.
What about you, Vincent? What do you think?
I think Max actually raised a very, very good point. Along the supply chain, there are there are a lot of different stage and area. So warehousing, pick and pack, whatnot, right? So I guess that is a very good point that there are some scenarios and some service or delivery capability. Some corporate or brands may be better to retain their own fleet. Right? For example, the warehouse to retail store. So these kind of, a full truckload, what we call it, kind of bulk order. I think it's easier to estimate the capacity, maybe more cost efficient for them to maintain their own fleet. But on the other hand, there are some, new usage or some B2B to C types of last mile, more instant, more agile type of service. It might be better to combine the help from other 3PLs. So there are actually some clients and quite a lot of them actually still maintain their own fleet, but at the same time they have some scenarios that they need help from us. For example, they still do their traditional 2-3 days delivery by their own truck, and then they use our service in their one hour delivery express service. And what is more interesting is that the reason why we call ourselves a smart logistics company is that we actually have 1/3 of our team from IT and data, right? So other than providing pure logistic service for moving things around, we actually have an offer that help our customer to use our system to manage their order and manage their fleet. So we have a protocol 6 solutions where we actually productize our system, which we have been using for a couple of years. We productize our system, and then for these kind of corporate, which they have their own fleet, to let them use our system to manage their fleet. So this is also something that, other than just providing fleet, providing courier for them, they can be helped by using our service, right? Some client in Thailand, for instance, they are not even using any of our delivery services, but their full operation is using our system to manage their fleet. So this is a very interesting anchor point for us. Yes.
Okay. Wow, interesting. Now, Magnus, since you mentioned drones, I do want to hear from you too, like your thoughts on drones and delivery robots, because, you know, clearly some of the big guys, like even Amazon, have been trying drones and, delivery robots are a big thing in China as well. Although it's debatable how far they've gone, you know.
Yeah, I think this is
explore.
Sure. What I would say is that I think it's important to distinguish what technology is capable of doing on the one hand and what value it brings to the ecosystem on the other. And when we look at drones, if we start with drones, is there a use case where drones can be effective and meaningful from a last mile standpoint? I'm sure, yes, there are definitely certain use cases for, I would say, especially B2B. Where you have more B2B logistics, there I do believe that when you look in the marine industry, you can look in certain remote areas and so forth. Right? But you very quickly run into issues with battery time. You run into sort of the scalability, the cost per delivery and so forth. That makes it, from a B2C sort of metro perspective, I don't think we will be seeing drones as a mainstream means of delivering last mile. And if you look also in terms of the sentiment, I think many major logistics companies worldwide are more sort of realizing that this is probably not going to happen. But that doesn't mean that we should stop innovating. We need new technology. We need more technology. We need better technology. Just because drones may not be the one sort of key solution that we've been looking for, we should continue to innovate. I think with the robots, similar story. I think we still have to sort of remember what is the pain point and the problem that we are solving. What is the labor situation, the availability of workforce, the cost of that versus the cost of operating technology. There needs to be a balance. And I think innovation technology is great, but we have to remember the actual impact and value that the technology brings for the value chain as a whole.
But is this something that Lazada has explored or trialed in your markets?
In terms of automation and enhanced logistics technology, we see this as core business for us, and we have to continue to look at new solutions in the different types of facilities that we have and operate. When it comes to robots and so forth, I think we are looking at various partnerships with academia and sort of how we can bring the thinking forward using, again, the data that our ecosystem generates to try to understand what are the pain points, what are the choke points, and where can we become smarter together by, on the one hand, leveraging the available information with new technology. But again, I will say that we should continue to innovate, but I think we are yet to find sort of that breakthrough that's going to completely revolutionize what we see as last mile delivery.
Vincent, do you think this is an area that Zeke can already explore?
I think it is very interesting topic about the usage of robotics, right? So I guess we have been doing some trial in different area. Okay. Although I agree that we don't see in the near future we will use robot or drones to do everything from end to end. But there are certainly some area that's worth using robot or drones to replace the manual work, right? For example, in the last mile delivery, especially in Hong Kong and in cities like Bangkok, for example. Our courier very often spend quite a lot of time waiting for lift. So here, robot or drones sometimes help for us to hand it over to the robot or a machine at a lobby, and then the robot go up to different floors of the same building. So our courier can just go. Yeah. So this will make some sense, especially for improving the efficiency of our courier. And we have been talking to partners, so to see whether we can use it in some pilot area, for example, hotel, technology park, campus, or university. Right. These kind of scenario, these kind of locations may be more feasible for us to do trial. But I agree that in the near future, we don't see it will completely replace what we have been using, in our current model.
How you're going to sustain this momentum? Because earlier on you mentioned that the COVID-19 has definitely brought a positive change to your business, and I'm sure it's the same for you, Magnus, given the sort of surge in demand from consumers. But how are you going to sustain this momentum? Because surely when the pandemic is over, then people will, I don't know, I mean, on the commerce side, they may want to go back to shopping for real, and which would obviously affect the logistics side as well. But do you think people are now getting used to this, or maybe you have to do something to sustain this new momentum?
I think, of course, we all hope that this difficult period of COVID will pass very, very soon, right? However, what I see is that it is a kind of a fundamental change of consumer behavior, and it is an eye-opening period for them to see what is possible, with the help of logistics or technology, right? So what we see is that the online shopping frequency or there might slow down a little bit. However, it will not go back to a couple of years ago, the situation, right? And for example, things are being innovated during this pandemic period. Actually will go on to evolve, right? For example, before we don't see a lot of online consultation. I mean, the visiting doctor, you have to go to the clinic, right? But during COVID, this happens quite a lot. People visit, do online consultation through the app, and then they need the delivery of medicine. So this kind of service, when they are on, people are getting used to it. Even though the pandemic passed, people will still use this kind of online consultation, especially for some routine checkup or consultation of the doctor or nurse. So this is an example. Just I think even passing the COVID, this will be some of the new scenarios that are coming up, and it will keep evolving in the future.
A new habit, so to speak. Magnus, do you agree? And how are you guys going to sustain this momentum for your commerce business?
Sure. What I said in the beginning, that I think we don't fully yet realize or are able to internalize just how much has actually taken place in the past 24 months. I still think that's true. I think that we are yet to fully land all of the the impact of the transformative change that is taking place under our very feet. When it comes to user behavior and consumer behavior, I think that all consumers are inherently omni-channel, multi-channel in nature. I think all of us, we have online for some use cases. I personally like to go to a shopping mall on occasion. I think there are many other people who do the same. The key word is not e-commerce, offline. I think offline, online, it's two terms that's going to disappear. It's going to be a technology, or more so a digital transformation of the whole retail ecosystem, where technology is used as a transformative catalyst to really drive new ways of leveraging data, of course, that we always talk about, but really how we can enhance the end-to-end user experience and what the customers can get out of being a part, or should we say, just participating in the retail economy. I think that's what we will be seeing on a very permanent basis. I think businesses, exactly as was just being said, right, that businesses are realizing just how much value technology can actually bring. And I think we are just in the very beginning of that. The next 5-10 years, I think they're going to be some of the most innovative and transformative, probably in our lifetimes. I think we have discovered so much new technology in a very, very short span of time. We are putting it to market, and I think that is what will shape the world going forward.
Wow, looking forward to that. Now, before we wrap up, I want to ask you guys. So, obviously Lazada is a e-commerce giant, and you guys need logistics, and we've got Zeek here. They're a smart logistics company. Do you see any potential synergy, maybe cooperation moving forward, especially given Zeek's interest in Southeast Asia market? Vincent, do you have anything you can tell us?
Well, yeah, I think that will be very great if you can have a chance to work together with Lazada, because we actually provide different types of service, right? Instant, same day, next day. We do different, quite a wide spectrum of delivery service, right? I don't think today is a good time to introduce my service to Magnus, but I treasure there will be a chance in the future that I can talk to him in a more detailed introduction. Yeah.
Magnus, any interest?
For sure. For sure, that's a deal. That's a deal. No, I think for us, keywords are very much how we bring in more partners to create a better ecosystem. And that's how the Southeast Asian digital economy is built. It's built on many, many different companies working together. In the case of Lazada, we are, at the end of the day, we are a platform, we are an app. It's really the ecosystem around that platform that is the value and really what our customers, our SMEs, our brand partners, and everyone else sees and experiences. And we need more partners and more innovators like Vincent to be a part of that.
Well, thank you so much, Magnus and Vincent, for joining us today. And thank you for everyone who tuned in to today's panel. And stay tuned for more content from the All Market Summit Asia 2021. Hello everyone, I'm your host Richard Lai, and for this panel, we'll be talking about unlocking business growth in VR and digital experiences. Joining with us today is Mr. Steve Zhao, who is the founder and CEO of Sandbox VR. Hello, Steve. And joining us all the way from Shenzhen is Mr. Alvin Wang, who is the China president of HTC. Hi there, Alvin. Hello.
Hey, Steve. Good to see you guys.
Good to see you. It's been a long time. It's pretty cool to see you in this virtual environment. We've got a pretty cool virtual stage here with all these funky buttons behind us. So I hope you like it as well. Now, this panel, the overall theme is the path forward. So it's basically about how your businesses are kind of recovering from the pandemic, or maybe even somehow being accelerated by the pandemic as well. So I'd like to hear from both of you on how, what kind of impacts the COVID-19 has brought to your business, both positive and negative. Maybe we can start with you, Steve.
Yeah, Richard. So we do offline-only retail location to do free roaming VR. So at the onset of the pandemic, we actually had to shut down all our locations all over the world. So you can imagine a business where 100% of your revenue go to zero.
Yikes.
So it was survival. During that time, we were also gearing up for Series B.
Oh, wow.
So the company was running short on cash and we lost 100% of our revenue. So what we had to do was basically, we had to let go 80% of our team within a very short period of time. So it was just trying to figure out how do we survive as a company with very little capital.
Well, I'd like to get back to you later on about your stores in a moment, but what about you, Alvin? I'd like to hear your side of the story as well.
Yeah, I mean, I think the early phase, the first few months of the pandemic, we had similar types of impact, maybe not to that level of zero, because we do sell some to the home, so we're not as dependent on people going out. But for a lot of our B2B businesses, people stopped buying capital equipment. So that was actually a very large impact. And also a lot of our offline sales partners were shut down. So at least for the China business, it was a very big impact on the business side of our purchase. The good thing is that it actually recovered in China much faster than a lot of parts of the world. So within probably about 1 or 2 quarters, we were pretty much getting back to normal rates. And then actually, over the last couple quarters, we're actually hitting some record numbers. So, in a way, like you're saying, the pandemic probably accelerated the understanding of the technology and the willingness to adopt a more, virtual life and remote collaboration, remote meetings. Those type of activities that people were doing on a 2D screen made it more natural for people to accept doing it on a 3D level. So, in a lot of ways, it was an educational, benefit to a lot of our audiences that weren't exposed to that technology before.
Now, Steve, I want to circle back to you on your store closures you mentioned earlier, because you've actually managed to open some new locations over the last few months. Congratulations. You opened in Shanghai, Austin, and Las Vegas. So how did you decide that now is the right timing? I guess the vaccinations have to do with this, and maybe the pandemics kind of starts moving out in certain areas.
Yeah, thanks, Richard. So a lot of our locations are in the US, and in the US, it started to really open up in January, kind of coinciding with the vaccination.
So we've seen that the government relaxed a lot of restriction in terms of opening up for retail locations. But we also seen that landlords are willing to work with us. And you kind of imagine in like an impaired real estate market, like we all try to work together to get a deal done. And because of that, we've been able to scale these locations. Not only that, there is a pent-up demand for a consumer to go out with their friends and family, and Sandbox is a great destination for that.
Cool. And yeah, I know that in the case of Las Vegas, you guys actually took over the old store, which was run by The Void. And I guess the landlords were keen to keep another VR experience in that strip, kind of.
I think, running an offline-only location-based business has been tremendously difficult, and The Void wasn't able to survive the pandemic. So for us, it was, whatever it took to survive as a company. We went back to landlords like, we've been able to prove actually during the pandemic that there were more demand than before the pandemic. Oh, wow. And we showed them the numbers, and landlords were pretty excited that we can actually retrofit Sandbox into, the former Void location. And that's how we got the deal done.
Fantastic. Congratulations again. Now, Alvin, what about your side? I'd like to see what kind of, which use cases saw the biggest growth from your markets? I would guess education could be one of them, but any other specific use cases that you saw a surprising growth during the pandemic?
I think, the training space and the collaboration space actually were some of the faster growing areas because people were so separated from each other. It was hard to do. They used to do a lot of face-to-face training, which they couldn't do. And to allow people to get into VR, a lot of companies found that their trainers and their new staff could communicate a lot better. And they could bring in experiences that are tactile-based experiences that is hard to do through video. Right? In terms of the collaboration side also, because of the distance between each other, people started to lose connections that they used to have when they were in the same offices, where they lost that feel of being in a team. And especially for new employees that had never seen each other, they really had no connections. And it's hard to build rapport when you're on just a Zoom call for that 1 hour and then everybody's racing to hit the red button when you're done with that hour. So there was really no communication with people outside of that very specific work function. So having these kind of virtual experiences where people can actually have one-to-one conversations during a group session and be able to feel the positional, I guess, positions of each other as they talk, and be able to feel that presence that you would only get while you're inside one of these VR devices. I think those are kind of things that really surprise a lot of our customers, particularly the B2B customers, in terms of the value. So the good thing is a lot of those tests were being done during the pandemic, and now that things are starting to go back, they've actually found that it was so useful, they want to keep doing it and expanding it. And we have actually a customer, I can't talk about it, they've got over 100,000 employees, and they're thinking about how they can get every single employee to get one of these devices at home so that for them to do hybrid work, they can still not be in the office, or not be in office all the time, but still maintain the feel of being together with each other. So I think that's actually one of the surprising benefits that's come out of the pandemic.
And that'll be a big win for you guys in terms of number of units sold, huh? If it works out.
Sure, of course. But I think that's going to be a trend going forward for all businesses. It's not just a few specific ones. So I think they're going to essentially be a trendsetter, and a company of their size will definitely make waves once that kind of information gets out.
Now, since you mentioned that people now want to use VR to get together, are you able to name a few examples, like which particular apps that both your customers and the general consumers have been using? And likewise with Steve, have there been any particular experiences at your shops that people have kept going back for, especially since you're reopening? Alvin, do you want to start off?
Yeah, I mean, for us last year, because of the pandemic, we actually put together something called the XR Suite. I don't know if you remember that, but essentially a collection of 5 applications that was specifically intended to help people get together and be able to have that virtual presence, whether for meetings, whether for big events, whether for social environments or educational environments. And we even had an art-related kind of art and culture app, right? So having that type of a suite together really got a lot of traction. In fact, our events app was probably one of the most popular ones because people couldn't get together in large groups anymore. So being able to do concerts, being able to do conferences, and even just team building for some of these businesses, they found it to be very useful. So the traffic on that has actually gone up quite a bit. And our casual meeting app called Vibe Sync has also really taken off because that app allows you to use a phone, a PC, or VR to meet with each other. So it's essentially as easy to get in as you would with a Microsoft Teams or a Zoom type call. So I think those are two of the real kind of winners. I guess one last one is the social app, VR Chat or Vibe Social, for people to because they had a lot of time, so a lot of them actually started to build worlds inside these virtual environments, and then they invited people to come visit their virtual world. So this is kind of the whole beginning of what people are forecasting for what's called the metaverse these days, where everybody has their own kind of personal virtual space. And I think that app is going to become more and more popular because we're just seeing huge growth in terms of retention and new users.
Cool. All right, you mentioned metaverse, but let's hold that thought for now. I want to come back to Steve first. And what are the top most popular experiences at your stores lately? Because I must confess, I haven't been to your stores for some time. I know there's one in Hong Kong. For those who are in Hong Kong, you check it out. And what's new? What are people playing these days at your stores?
Surprisingly, it's our original experience, the first one we made, that is the most popular, which is the zombie one. It's called Deadwood Mansion.
All right.
And you think about when people come to Sandbox, it's about escapism, right, with their friends, and nothing gets you really shaking up, having a great time than being swarmed with zombies. But it's not purely a game because in order to do well, you actually have to collaborate with your teammate. You have to communicate. You
have to assign a leader as well.
You have to assign a leader. So people love that. And when we launched in Shanghai, we were inside a mall and it was on the first floor, but people screamed so loud that you can actually hear from the ground floor. Like the Starbucks next to us, you can hear screaming every 15 minutes. And that's people playing Deadwood Mansion.
Did you get any complaints?
We did. I mean, everyone kind of peeked in. It's like, well, this is the byproduct of, escapism. When it becomes so real that this is how they normally would react if zombies were actually there.
And you guys
I remember playing that app. That's actually a pretty fun app, and it's a pretty good workout too.
That's right. You were there too. You played the zombie one. Is that right, Alvin?
Yeah, I played the Deadwood Mansion, and I remember you even sent me a little highlight reel afterwards. So you guys do a great job with the follow through and kind of social advertising side.
Now, Alvin, since you brought up the M word here, which is metaverse, it's definitely a buzzword that I'm hearing more and more these days. But for the general public, how would you explain what a metaverse is and why does it benefit or potentially benefit your businesses like VR, and how can people like Steve and his company benefit from the metaverse potentially?
Yeah, I think it is definitely a word that's gotten a lot of buzz lately, and maybe a little too much. And in a way, because everybody's using the word, it's being misused in a lot of cases, and it creates a lot of confusion. So I'm glad you're asking this question. At the end of the day, I think that the simple way to think about this is, when we went from the radio to a TV, we went from a one-dimensional media to a two-dimensional media, right? And we went from the TV to the internet, we went from a two-dimensional to a two-dimensional, but we added interactivity. Now, when we go from the internet of today to the metaverse, we're essentially going from two-dimensional to three-dimensional. And then the interactivity goes from using a keyboard or mouse or a touchscreen to a full body, full hand, eye tracking, voice tracking. You have a much more natural interface. And now you, instead of looking at a 2D screen in front of you, you're now looking through a pair of glasses or a goggle that gives you that immersion, right? So essentially what the metaverse is the internet that we've been building over the last 50 years, but now in a three-dimensional version. So instead of looking at a website, you're looking at virtual worlds or virtual spaces. And instead of using traditional interfaces, you're now getting into an immersive interface, right? Of course, you can still go back and use a 2D screen to enter the metaverse, but you're going to get a much more limited experience where you're not really immersive and you may not have that full body experience. But kind of what Steve's environment is doing with his games is what essentially every future website will be, right? Essentially is a future experience versus going to a URL and seeing a flat screen. And one of the key things is a lot of people are saying there's going to be a lot of different metaverses. And at the end of the day, no, there's not. There's going to be one metaverse made of many, many virtual worlds. Right, so I think that's really important to understand, because you're going to see people saying, oh, we're making a metaverse. Oh, we're making a metaverse. No, there's only one metaverse, just like there's only one internet today. There's going to be one metaverse, right? And nobody owns it, and everybody can use it. Right? I think that's really the key. So if you think about all the things that describe the internet today will be the same kind of factors that describe the metaverse in the future. Everybody can access it. Everybody can add content to it. Just like right now, if you're on TikTok, you could upload a video, right? But it's now you're uploading a world, and people can come visit that, right? And the other thing is, it's got to be device independent. If it's saying, oh, I can only use a certain device to enter it, that's not really the metaverse. That's just some kind of a closed app, right? So there could be multi-user gaming environments where I have an account with this particular game, or have an account with this particular company's device, and I can enter a space. But that's not really the metaverse. That's just one example, one corner of the metaverse where I'm using a specific device to get into. So it should be open. It should be very accessible to any device. It should be non-device dependent. And it should also allow people to add content. So they have agency in that environment, just like we do today. I could put a comment onto an internet website or on somebody's blog. I should be able to leave a mark in this virtual world that I've been there, right? So just think about everything that we've done over the last 20, 30 years with the internet. We're going to take it to a different, to add an additional dimension to it for the metaverse. I don't know if that makes sense, or is it too complicated?
It sounds like it makes sense if you're talking about the next generation of internet, because
yes, it's
device agnostic. Everyone can access the internet with a whole bunch of websites in there. Whereas in the metaverse, it sounds like it's still very hard for me to imagine, because for most people, I think they would imagine it being some sort of a different kind of 3D game, a bit like Minecraft, but more fancier, or even maybe Second Life. But it's
yeah. I think both of those are early incarnations of what a corner of the metaverse will be. But the fact that they are not interconnected to each other, right? They're not really part of that same universe. They're not open. You have to have a separate account to go into, whether you're talking about Minecraft or Roblox or Second Life or Fortnite. None of these apps, none of these games are actually metaverse, right? They are an app that right now is running on the internet, but a true metaverse will happen when we can go into these different places with a single account, with a single avatar that we go across all of these apps, right? It's going to take time to develop, and it's not available. It's not there yet, right? A lot of people are saying, oh, the metaverse is here. No, it's not. It's actually, we're still years away from what the true metaverse is. And the metaverse is a term that came from Neil Stephenson's 1992 book, Snow Crash. Right? And I've read that book a couple times, so I actually have at least a feel for what he was intending for that type of a universe. And if you think about it, none of those scenarios that he described was I needed a special account. I just have my account. I am, a hero, a protagonist, and I can go into any of these worlds. Right? And that's how it should be. right? Now I can have a different outfit, if I go to the virtual bar versus I go to the virtual, sports center, I might have different outfits or different avatar looking, representing me, but it's still me, and I get to choose, right? Where in this case right now, the accounts are completely different. Some of them have avatars, some of them don't. Some have a fixed avatar. It's what's being done today is a very primitive version of a corner of what will be the metaverse at some point.
Okay. Steve, do you have any thoughts on the metaverse? Do you think it's something that Sandbox can take advantage of for your business?
Yeah, I agree with a lot with what Alvin said. When I think about like these virtual worlds and being interoperability, which is to be able to hop into different worlds, but having your same avatar is very valuable. And I think that's kind of where kind of crypto lies. Is having crypto lies is because of having like decentralized ownership, absolute verifiable ownership.
You're talking about NFTs here?
Like NFTs. So for us, it's the metaverse is exciting when you have different interfaces to the metaverse, right? You can still access with your phone, like what Alvin said, but with a VR device, it's very immersive, very exciting. Where Sandbox kind of fits in is like, what if one day you can walk into one of our location and you just walk into a persistent world?
Okay.
And for us, we're space agnostic, we're device agnostic. We can utilize different devices where you can actually feel like the 4D effect of these ownership that you have. So if people putting so much emphasis in their ownership, it's great. Like you see an NFT, like people putting on their profile pics on Twitter, but imagine what it would be like if you can actually wear your NFT and be able to feel it. And for everyone else physically to feel that presence of what you own. And that's what we want to look into.
Are you guys already working on NFTs?
We are not. We are building the building blocks to getting there, which is basically currently our experiences are, with backpacks, it's wired. So the first step is to get it to wireless first.
Okay.
And our experiences are offline. So eventually it's get from offline to online.
Okay.
So once you move into that process, then you can start connecting to these, virtual worlds and start building for that.
Looking forward to that. And Alvin, I see that HTC is also prepping something on the NFT side. Can you tell us a bit more about what you guys plan on doing?
Yeah, I think NFT, at least the concept, not necessarily this current incarnation, will be a very important part of this future metaverse, because we will need a way to, to show ownership of property, right? And right now we are buying physical goods, so it's very easy to say this is mine or that is yours. But in the future, when you're working with digital goods, whether it's a digital clothes for your avatar or whether it's a piece of music or piece of art, having that non-fungible token is going to be an important mechanism for us to maintain property and IP. So I think some of our initial things that we've just announced actually is going to be related to our art project, our Vibe Arts program. It's actually going to be creating tokens for some of the artworks and some of the artists that we've been partnered with. So please look for more news in that area. But the NFT kind of in the fine art space has been blowing up a little bit early this year, and then it kind of went down a little bit. But I think it's every single technology when it first comes out, it's a little bit overhyped, right? But then over time, the value of what those things will do will show its case, particularly as we start to move more and more into a virtual world and spend more and more of our time in these virtual environments, because then how we look and feel and what we have in the virtual world may actually mean more than what we have in the real world. And if we're spending 90% of our time of our wake time at home or in a headset, do we really care what brand we're actually physically working? Where I'm probably going to be wearing what I did last year during the pandemic, which is wearing sweatshirts and T-shirts all day, right? That was I had like a collection of clothes that was about just 3 or 4 things that I just wore every day because it was the most comfortable thing for me. And I think for a lot of people, their virtual representation will become more important than their physical representation as we transition more to a virtual life.
But do you think NFTs will go mainstream to the point where it becomes one of the main business foundations for some companies?
I think the term NFT right now is being associated with these, $69 million piece of JPEG, or $16 million cyberpunk, right? I don't think that's what NFT will be. NFT will in the future just be essentially an invisible token that says, hey, I own this shirt, I own those shoes, or I have access to enter this club, or to go get a pass at the sandbox, physical or virtual environment, right? It can be your key, it can be your proof of ownership, it can be something that gives you that look and feel when you represent and go somewhere. So so there will be some kind of mechanism that helps us go across all of these virtual environments and still maintain that consistent sense of ownership, right? Because right now, if I buy something on Roblox, I don't have anything. That one thing I just spent money on, it does not appear on my Fortnite account. It does not appear on my Minecraft account. It does not appear on my Second Life account or my virtual VR chat account, right? So having that common accepted and agreed upon proof of ownership is valuable, right? And I don't think the word, it may not even be called NFT, or people won't be, because NFT is not a very easily remembered word. There will probably be a more common word that people will come up with for representing that.
Okay, cool. Now, I want to see if you guys are currently looking into other kinds of technologies, or have there been any recent technological breakthroughs in, well, I guess for you guys, it's mainly the VR space. Steve, you mentioned that you're looking into maybe upgrading your system, the gear and whatnot. So, what's your criteria? Like, obviously, you're getting rid of the backpack, so it's going to be a standalone VR headset. But you also want to let people walk around freely within a room. So I guess what kind of tracking system are you looking for? And maybe are you adding other sensory components to your gear?
Yeah, so for us, is basically the reduction of gears. So you have the backpack, which kind of acts as the PC. But now with the wireless headset, we want to move into it so you don't have to wear a backpack anymore. But wireless also enables tracking not to be inside our room, but outside of it. So like currently, our store is all physical, right? All the experiences happen inside a room. Eventually, we want to make it so that, when you just walk in the store, it's all virtual. So that's where we want to head towards. And wireless is one of the core steps to getting there.
Right.
But as you were saying, another big piece is, to believe in the world, and to do that, you need a 4D effect. Mm-hmm. So right now, you have these haptic vests that can mimic a lot of texture and tactile.
Yeah, gunshots.
Gunshot, zombie scratching you. So we definitely want to enhance those. So when people walk into the world, it's like they really believe the character they are and how that world impacts them. So that's like another bucket that we want to continue to innovate on.
Excellent, excellent. Alvin, I know you guys recently released a couple of new systems. You've got the Vive Pro 2 and the Vive Focus 3. One's tethered to a PC, and the other is either standalone or you can tether to a PC as well. How are these doing? And have you seen other recent technological breakthroughs? And what can we expect next?
Yeah, I mean, as you know, earlier this year we just launched the 2 enterprise or business more focused products that are for the premium segment. We just announced a week or 2 weeks ago, which I think you've seen has been quite popular in the news, is our more consumer oriented glasses type product. So I think that's really the future is, rather than having the headsets that are more like HMDs, kind of a box on your head. A lot of people complain about the weight or the size or lack of stylishness. We're now moving to, smart immersive glasses that you put on as real glasses. And that's going to be the future, because that's what people expected, all of these years. And it's finally here. And, I think we're getting really great reception for this product. So it's going to be, going on the shelf in a week or 2. And we're really looking forward to hearing the customer feedback. No, these are immersive glasses. So they are a VR focused glasses, and it's 6 degrees of freedom. So you can walk around a full room, just like you do with our full, PC or standalone devices. So you can do, if you're doing a virtual museum, you put this on and you can walk and see all of these paintings on the wall, right? If you're If you're wanting just to watch a 360 movie, you could do it. If you want to play a fishing game and just sit on the couch, and you can do that too. So the fact that you can have something that thin and that light that feels and looks like glasses, but gives you that immersive experience, I think that's going to open up a brand new class of users that have never been exposed to VR and make them really interested. And we've made a number of very specific apps for this new hardware product that will highlight its benefits, and we're really excited about what the market reaction is going to be.
Well, thanks, Alvin. That's a good spot for us to wrap up this panel as well. I'd like to thank Alvin and Steve again for joining us. Always an absolute pleasure to talk to you guys. And for everyone else here, please stay tuned for more content coming out of All Market Summit Asia 2021. Thank you. Hello and welcome back to the All Market Summit Asia 2021. I'm your host, Richard Lai, and in our previous panel, we touched very briefly on the subject of NFTs. So for this session, we're going to dive a little deeper and check out the potential business opportunities of NFTs. And joining me today is Mr. Hanjin Tan, who is an award-winning singer-songwriter from Hong Kong. And he also happens to be the world's first artist to release a Chinese music NFT. Hanjin, thank you so much for joining us today.
Thank you for having me.
So why don't we start from the basics? We have to assume that not everyone understands the NFT concept. So, and given that you have quite a bit of experience with publishing, releasing NFTs yourself, I'd like to hear from you. How would you break it down? How would you explain the NFT concept to the general public?
Okay, there is the blockchain, and on the blockchain lives cryptocurrencies, and these are fungible tokens, which means that if you have a token, I have a token, and we swap, we wouldn't be unhappy. But NFTs are kind of like mobile phones, like that live on a blockchain. You have a mobile phone, I have a mobile phone. They kind of look the same, but if we swap, we're not going to be happy.
Okay.
Because each one is unique, and each one is capable of doing different things and representing different things, and that's an easy way to understand NFTs.
Oh, so that's why NFTs are used to serve as a certificate for artworks, so to show that they're unique. That's why.
Yeah. I see your point. The applications of NFTs are endless. The nature of NFT is like it's as we said, a unique tokens that live on a blockchain. They're essentially smart contracts. NFT is just kind of like a nickname for a type of smart contract, popularly recognized as the ERC 721, and that is the Ethereum smart contract called ERC 721. And as of now, there are other contracts like the ERC 1155, which functions like as an NFT as well. But most people, when you say NFT, you think about the ERC 721. And the applications of an NFT are endless, and we're only just beginning to touch the surface. Most people talk about NFTs as like being because they're unique, they're capable of representing unique assets that live they're capable of living on the blockchain. The most obvious one is digital assets. So digital art, digital music, digital anything that can be stored on IPFS or Arweave.
Okay. Now, which of the recent NFT releases have impressed you the most? Because I think you have actually been releasing music yourself, but then there are also a lot of artwork. There's even CryptoPunks and things like that. But when it comes to maybe creativity or in terms of how much fun they are, which ones have impressed you the most?
There are the obvious ones that everybody knows about. The Beeple, but before the Beeple's 69 million Christie sale, there were huge landmark drops that marked the boom of NFTs. The Grimes drop with Nifty, the Aoki drop with Nifty, and the Blau drop on Origin Protocol. And these are big because the Grimes drop was one of the first to make like a huge amounts of dollars for copies. of audiovisual NFTs. And the Blau drop is because he's the first musician to put out like music vinyl and pre-released albums and all kinds of other access goodies as a product, and it made a lot of money, somewhere around the neighborhood of 12 mil. And the Aoki drop is relevant to me because that was when I discovered NFTs. The first big drop that came after I discovered NFTs was the Aoki drop. So I was watching that. And after that, there were a lot of significant drops as well. In the music space, we can talk about it later as we dive into music, but like everybody would have noticed the Christie's and Sotheby's drops. So we're talking about the punk drops, the Christie's and Sotheby's ape drops, and these drops mark the ascendance of PFP type NFT collections, picture for profile, which basically means it's just a JPEG that you can use to put on your profile on social media. That's the basic idea, and they're worth a lot of money. And right now there are a lot of collections popping up, not just on the Ethereum chain, but on all the other alt chains as well. In between now and then, there was a very interesting concept that started with Loot. Loot brought it to light. Loot is a text JPEG auto-gen collection whereby there are only 7 words with a black background and it looks like it's on MS-DOS. Nobody understood it when it first came out, and since then they've had 3 more collections, so they have a total of 4 collections in the Loot series. And in a nutshell, they appeal to the Dungeons and Dragons people because that's how we play the game. And also appeals to people who deal with metadata, because like if you work with metadata, like I'll just give you some key points, and you start and the coder starts working. So that those are the 2 cultural appeals. And in terms of function, you no longer just put it in your wallet and wait for the price to go up and sell it off. You put it in your wallet. You can go back to the treasure.lol website. You can break your NFT into little parts.
Okay.
Say there are 7 words, you can break them into seven things, and then 7 separate words which you can stake, and you will start to claim daily. You claim on a daily basis their native coin, which is magic, and you take the magic and you can stake it in their single-sided staking protocol, and you can exchange it and trade it on DEXs. And in the future, we'll see more and more projects go to finance other different types of utility. Like Jeff Becker has something called the Citadel, and there is the MTA, and they set up games like scavenger hunts, whereby if you want to get whitelisted to participate in the pre-sale of the NFT, because pre-sales are common because when NFT collections that are hot, when they release the NFTs, at the moment of release, usually there's a huge amount of people who try to buy it at the same time. They compete for the spots, and that pushes the gas price up, and that makes it very expensive to buy something that was not priced that expensive to begin with. So, for instance, something that's priced at 0.5 ETH, 0.05 ETH, and normal gas is like somewhere between 0.01 ETH and 0.02 ETH.
Is this like a commission fee? Because you might have to explain to people.
Okay, gas is when there is the blockchain. NFTs and FTs, fungible tokens, all live on the blockchain. When you want to transfer an asset from A to B, miners have to solve problems on their computers to validate this transfer. These problems are very tricky to solve, so they use computers, and the people who do that are called miners. And the miners have to do the work so that the owner address can be changed from my address to your address. And for NFTs, there's a gas too. And so when a lot of people are trying to do the same thing at the same time, the cost of it will go up. it will get automatically. And so what happens is when traffic is up, something called a gas war happens, and you likely wind up pay more for the gas than you pay for the NFT itself. There are several projects that have suffered from gas wars, whereby because the gas got so high, the project didn't sell or perform as well as it was supposed to.
Is there any way to avoid this kind of gas price hike?
There are many projects that have come up with right to mint systems, whereby buyers will go to the minting site and mint a right to mint, and they will mint the NFT at a very low price or for free even, and they can choose to mint the NFT later when the gas is lower. Yeah,
like an off-peak hour kind of.
Basically, yeah.
Interesting. Now, you talked a lot about the different kinds of NFTs, the different currencies even, but I want to go back to your first NFT release, which was called Nobody Gets Me. You sold it for, it was just one of one.
One of one.
And you sold it for 7 ETH, which worked out to be around $14,500 back in April. And then you had the second NFT single called The Fuck Is an NFT, which you sold 77 copies for 7 BNB. I said it right?
Richard said fuck. I love this.
I'm sure we can bleep that out. And you sold all 77 copies for 7 BNB each within 1 minute. Congratulations again. And that was around $193,000 US. Now, ignoring all these figures and the amounts, I mean, these are clearly two different models. And you've previously told me that these are kind of experiments for you.
Yeah.
So how would you compare the two processes? Is there one that you prefer to the other, and how could you have made it more fun?
Okay. First of all, they were fun enough for me. I didn't think of having fun with those projects. They were not really meant to be fun. They were meant to be demos and to help people. The fun projects are coming.
Okay.
Yeah. Because I've decided that I've had such a hard time in the past 5 months researching NFTs, and it's been so painful. It's about time I had a little fun as well. But let's go back to your question about the first two drops. Let's take the story from the beginning. I started learning about NFTs on Clubhouse, and then I learned, that's where I met you.
Yeah.
And on the thing about NFTs that caught my attention was that I've been trying to find solution for the income gap and musicians and creators earning below the poverty line. It's been bugging me for a long time, and NFTs became it looked like a way out. And so I really started learning about it and evangelizing about it. And it's because I didn't get any traction from merely talking about it that I decided that I have to make something. Maybe people are scared because they don't know what to do, because it was scary learning about it, setting up my MetaMask, it was so hard to get Ethereum into the MetaMask because I did not have a debit card. I still don't have a debit card. I had to find an exchange to convert my fiat to Ethereum, and I wound up paying a bit more than I should have to get the Ethereum into my wallet so that I could mint my NFTs on OpenSea, which was the cheapest and most accessible platform back then. And I chose OpenSea because it was accessible to anyone who wanted to do it, and it was the cheapest. So the first drop was simply to demonstrate that a musician with no graphic skills can use iMovie and make a 7-second trailer with 7 items, and to sell the non-commercial ownership of a song, brand new song, and a Zoom call for a certain amount of money. And it was successful. So after that, I got a lot of DMs from musicians mainly, and some other creators as well. And I finally get my chance to handhold them. After handholding them for about a month, I hear a lot of common complaints that Ethereum is the gas for Ethereum is expensive. It scares them. One-of-one auctions are scary for them, or some of them want like, oh, I made this song and I want more people to hear it. I don't just want to give it to one person. So I thought like, okay, let's do another demo to show how all these problems can be solved. So I chose BSC, which is like 100 times cheaper than Ethereum in terms of gas. And I chose to do 77 copies, which is more than one person will get it. And I chose to do fixed price at 7 BNB. And it worked. The marketing strategies for both of them were entirely different because they were targeted at entirely different markets. First drop was done entirely on Clubhouse. Second drop was done entirely on WeChat.
Right.
So, the interesting part about the second drop is I tried to level up my graphics because NFTs are always going to be about graphics, at least for the short term.
Okay.
Because it's when you buy an NFT, the first thing you see, the first thing you experience is seeing. And you normally have to click it to hear anything. For some sites, you might even have to click it to open a second site in order to hear it. And this makes music by default take a backseat, even though we're trying to sell music first. So the visuals are very important. So I wanted to show that it can be done. Anyone could do it by themselves. I downloaded Adobe Suite and I learned AE from YouTube, and I made from scratch.
Wow.
And it's very, very difficult. I had a lot of help. I called a lot of people, and I made my 2D hamster into a multicolored Darth Vader disco. 27-second MP4 with the song "The F is an NFT," which is about what is an NFT, and as an NFT release, and like that worked really well. And after that, I got even more people asking me, DMing me to ask for help.
Now, I'd imagine the whole marketing strategy for your NFT releases were quite different to how you sold your music previously or marketed your music previously.
Oh, yes. Before NFTs, I didn't sell much music, at least for the year leading up to my discovery of NFTs.
Wow.
Music industry, and I quote Raoul Pal, is dead, and music has no value. Raoul Pal is a hybrid legend in crypto and stocks.
Okay.
And so his opinions are from where I stand are pragmatic and balanced, because he's not a pure crypto person, nor is he a pure stocks person. Yeah. So him describing the music as a product as having no value makes sense to me. There are a lot of people who say like, oh, but we pay subscription for streaming, but the fact is a lot of people don't pay subscription, and they don't, because they don't mind listening to the adverts every 15 or 30 minutes. So the advertisers pay for their enjoyment of music, which means they can listen to any music anytime they want for free, as long as they'll put up with the advertisement. But there are also people who don't put up with the ads, and they pay a $50 HKD subscription, and they get a buffet. So what happens when you can listen to anything you want at any time? You don't listen to it. Desert island analogy. You run a desert race, you're thirsty.
Right.
I'm gonna give you 2 bottles of water, and you will pay through your nose for them.
Yeah.
But when I give you a 12th bottle of water, you wouldn't even you would push me away, and you wouldn't drink it even if I paid you to drink it, because you can't drink anymore. You're full. And that's what's happened with music. Yes, streaming is amazing because streaming solved the piracy issue, but there are new issues. There was a stat that I read recently that I found most poignant. Like all the other stats saying like, oh yeah, so many % of musicians don't make money, so many % of musicians are blah blah blah. But here is one stat that says 0.2% of registered American professional musicians make above poverty line, which means 99.8% of professional registered musicians make below poverty line. And that's not very nice. And I think there's something we can do about it. And since there's something we can do about it, we should probably try.
And are people trying? Are your fellow artists trying, especially in Hong Kong or in nearby regions?
Some are trying.
Yeah.
Some are trying. Most are reticent. Yeah. Have you opened your MetaMask?
I have, but I haven't used it.
Is there Ethereum in your MetaMask?
Not yet.
That is the kind of reticence. And you're a tech person. No, nothing against you at all. It's just I think it's a great illustration to show how hard it is to even begin to get into the space as a consumer. Now that just means it's even harder to get into it as a creator. There are a lot of things that people worry about that stop them from like jumping on, and I want to solve those worries one by one and try to like help them get in more smoothly. And I'll tell you more later in the interview, I guess.
I will. I guess I will have to define myself by saying there's a certain volatility. The market feels a bit volatile, at least in the cryptocurrency side of things. But that's my experience.
No, that's a fantastic point. It is volatile. I get scared by it, but it has always been volatile, and it's not a new thing. So like, there are dangers, but I think it is for the same reason that there are opportunities. When you wait for it, if musicians and creators wait for the day where crypto begins to stabilize, there will be a lot more barriers to entry, and the opportunities will be much less and smaller.
I guess, with opportunities, there's always risk, huh?
Yeah. So do you want to risk it in cowboy land, or do you want to like not be able to change your life very much in a developed system?
Well, speaking of changes, for your third NFT release, you tried something different, or you are trying something different. It's called Hamsters. Hamsters with a Z, with a Z. And these are, how would you describe them? These are pictures of cartoon hamsters.
Yeah.
Hamsters being your mascot, I guess.
Yes.
So you collaborated with an artist and so far you've made 47 editions of these cartoon hamsters, and they're all sold out on OpenSea.
Yeah.
Now, what's next for your hamsters project? Because I read on the OpenSea page that you said these will be available in the metaverse. And, again, in the previous panel, we also talked about metaverse. So I would imagine what you mean by this is people can carry their very own hamsters around between the different worlds in the metaverse. Is that what you mean? And does this mean, because I think in one of your descriptions, you said there's going to be like some sort of 3D version of the hamsters as well, a Vortal, something like that?
Voxel,
sorry. Yes.
Okay, in a nutshell, yes. The metaverse is, as most people understand it, Decentraland, Somnium Space, Crypto Voxel, and Sandbox. I'm starting my Sandbox game. It's gonna be really cool. So everybody come see. There's gonna be like layers and layers of news about the Sandbox game launch. It's gonna be fun, it's silly, and it's not like the other Sandbox games where you go in and slash. In my Sandbox game, it's a happy musical place, and you play silly games like Frogger, but if you fall in the water, you die. If you get banged by a car, you die. But then after you die, you're reborn right away, and you can restart the game. And like you get to help the little animals in need, like Mr. Turtle and Mr. Bunny, and they need help, and they'll tell you what they need, and you can help them and after you help them, you gain all kinds of fun prizes, and you get to fight this big ugly bunny, and and at the end of it all, you get to watch a concert, you get to ride an air balloon, and like basically explore the whole space from a bird's eye view and fun stuff like that. Kind of different from the other games where you go in there and they're monsters and you have to like kill them all. If you don't kill, it's a kill or be killed. So like I'm starting this thing, and I'm working with Sandbox to see if I can create a campaign for young creators to come in, like, and they can't afford. Yes, there are a lot of people who can't afford to buy Sandbox land, so I'll put up my land. And like whoever has the best idea, they can build on it and see how it runs. Like, so like, these are things that I'm working on. And when you talk about hamsters in the metaverse, like hamsters will have a space in the Hanjin land, and like there's a hamster land, and like you come in and you with your hamsters and you can walk around with your hamster heads, and like and you have your little hamster kennels or like hamster wheels and like or hamster beds and hamster cots and like yeah, I'm working on making a hamster building. Because like we're in a tech age, like so like the sky's the limit, and you can just build it into the sky, and people can come in and like have their hamster playgrounds and like hamster bars and hamster blah blah blah.
Hamster bars.
So so when we talk about metaverse, we're talking about these type of spaces, but common understanding is anything that is interactive on the internet, immersive, is a metaverse. And yep, that hamsters is definitely going in the metaverse.
Wow, NFTs can be fun then. Yeah, you just made NFTs quite fun. That's pretty awesome. That's pretty awesome.
Yeah, and we don't use swords or guns.
No, not too much violence.
Now, if I want to smack you, I have to pick up an electric guitar, or a microphone stand, you know, or a lollipop. I don't know.
Okay, well, we'll leave that up to people's imagination.
Or a piano.
Yeah, well, no, I mean, that's a bit of an overkill, sure.
Piano bazooka, you know, like
piano
grenade, yeah.
Piano bazooka, I can go with that.
Yeah.
I can go with that.
Okay.
Anyway, now, before we wrap up, I do want to ask you, you know, so far you've tried music and pictures as NFT formats. So are there other kinds of formats or use cases that you see business potential in, or, you know, in terms of creativity freedom? Are there other formats you want to try?
The sky is the limit. Your imagination is the limit. But tech is also the limit. How quickly can you create these new fun ideas? Dynamic NFTs are definitely in the back burner. I want to make an NFT that reacts to real world IRL data streams. Like,
interesting.
Most people have done time. A lot of projects have done time, react to time. Like you click on it, a clock appears. Or like over the course of time or seasons, it'll look different.
That's already doable.
It's been done. It's been done. It's been done. I want to do stuff that reacts to markets, and I want to do stuff that reacts to moods or to the volume button in your computer.
Okay.
Yeah, and I'm working on one NFT series or collection whereby it's actually, you know, most PFP NFTs split their attributes by different parts of the body of the cartoon character. But like, how about an NFT that has, where its attributes is different? Say a line in a song, short piece of music has 16 parts or 8 parts, and each part has different variations, different lyrics. So you can kind of like, it's like a mishmash of like what the order and
build your own song.
The type of words. You can build your own line. Yeah, and we go towards building your own song. That's something extremely exciting, and that's something that I'm working on, and I hope to put it to market as soon as possible, because if this works, and it'll be hard because we're not talking about JPEGs anymore, we're talking about MPEG-4s. If this works, and if you can breed them and turn them from lines into verses, into choruses, into songs, oh my God, then here's a genre of NFTs that belongs specifically to musicians, which has not happened so far. And another solution I'm thinking about for musicians is, musicians are, like myself, are poor with building graphics. We know how to build 2D graphics for album covers. So let's capitalize on that. I've built a hologram of a spinning musical instruments and spinning vinyls. Like, they pop out of the screen. You just put on your Avatar 3D glasses and it just boom.
Okay.
And like, you just have to plaster your album graphic on it, and that is your NFT, and you stick your song in it. And this could make access for musicians to NFTs even more direct as well. And of course, other more DeFi type solutions to solve ramping problems, like converting fiat to Ethereum is painful. So for not just for the creators, but also for their fans. So like I'm thinking of, I'm trying to make like invisible ramping solutions. Yeah, with other projects and also on my own platform.
Okay, looking forward to that.
Yeah.
Now, I think that's a good place for us to wrap up. Hanjin, thank you so much for all the insights today on NFTs.
Awesome.
Yeah, and then for everyone else, thank you so much for tuning in to the All Market Summit Asia 2021. Hopefully see you next time. Bye.
Bye-bye.